It's gonna fuck up on Twitter.
Uh,
Hello and welcome to another episode of Quant Gang with Maddie, ALLin, Karim, and WhalesOnly.
What's up, everybody?
What's going on, guys?
As always. What a week.
We're coming
Pretty
to you in
relaxing
high
week for me.
definition, so it's gonna fail on Twitter, but we'll be here. Even if YouTube tries to ban us again or whatever.
No, they
That's
can't us,
right.
Maddie. They're trying to tell us not to tell the truth to the
Trying
people.
to shadow ban us. I forgot about that.
That's awesome. So yeah, excited for everybody to be here. So we're waiting for Richard to be done. So that's awesome.
4,400 views from our
Woo!
last stream.
Wow.
There you go. Because they knew that was important. That's awesome. How many people we have live right now, Maddie? Should we wait another minute or two? People
We got
transition.
about 50, but since there's so many watching on the replay, you know, we got to keep it moving.
Amen. Amen. Well, again, excited to be here. So want to do a quick recap of last week, right? Because it was a very eventful week, as we all know. But again, shout out to all the Hexicans that knew what to do, that saved themselves, you know, which is good. Welcome to the bear market. You know, again, it's exciting because we always play chess, not checkers. This is something we literally predicted. So we knew what this was supposed to happen. So now we're just moving along, Hex doing his own thing. But this is really when we shine because shit just got real, like we always say. So now no more easy 100x move. People are going to actually have to work to earn their yield. And
Imagine that.
Exactly. Imagine that, right? So, but also understanding the pitfalls of, you know, checking the emotion at the door. There's still a lot of influencer that's still in a cognitive dissonance and disillusion, thinking, oh no, it's gonna come back and this and that. But understand also what it means. And this is what me and Wells gonna really focus on today to prepare people, because as crazy as it sounds, if when this thing continues to go down, prepare yourself mentally, because you might see Bitcoin at 30K again and possibly below. Because if that
So
30,
hit the like and subscribe button.
yes,
And let's get started.
heck yeah. Woohoo!
All right. We're up to 70 now.
Nice. Welcome, everyone. Thanks for being here again. Episode of Quant Gang. So I think first order of business, because it's going to be a lot to talk about. It's going to kind of give a summary. So first, we're going to recap, obviously, some of the craziness that happens over the last 7 days and why we're doing, obviously, fortunately better than most, protecting our community. Congratulations and shout out to everybody that, you know, bought the dip, of course, whatever it is, the Hex dip, the Bitcoin dip, you know what I mean, or the Ethereum dip, so that you can turn that into more Hex and more T-share to protect yourself. Because remember, the danger about the bear market is not the fact that the price goes down, is the fact that it can stay here for multi months. I repeat, Hex clip. The most dangerous thing about the bear market is not the fact that it goes up and down, is the fact that it can stay there for multi months, which is the reason why the anger phase comes last. And this is really the one that really breaks people's hearts. And, you know, kudos to your Wells. Later, we're going to pull up the chart, show everybody again, because the Wall Street cheat sheet that people look at all the time, what's more powerful is not just about what the chart does, it's about the psychology behind it, because the psychology is what creates the chart and what those emotions are. So you get to have a barometer inside this bear market where we are in the face. You know, yes, we may have hit capitulation. That's great. But if you guys go back to that chart, capitulation is just the first phase. It's after, when it just stands still, not doing anything. And this is where Hex really transcend, because we love that. When nothing else is moving and we get paid daily interest, everybody that's not staked is basically missing out. So we're going to be definitely talking about that. We're gonna be joking a little about the Elon tweets, with the flip flops, playing his
Oh
game.
yeah.
And this is kind of hilarious.
He
But
called the bottom, didn't
right?
he?
People
He
can have
met
it
with
both
all the
ways.
North American miners.
I know,
All
right?
Wow.
Good joke.
7%
Yeah, you could have said that last
of
week, right? Before the
worldwide.
crash, you could have set up the
Yeah.
meeting. But I find it kind of fucked up, but funny at the same time because again, when the price goes up, everybody say Elon's great, right? When the price goes down, oh, it's not
Everybody
gonna be
hates him, huh? It's
right?
funny.
You
Well,
can't have it both ways.
And the miners, they're the ones that dump the price. So if
Exactly.
they're going to save electricity, I guess they're going to keep doing what they do best, which is
Yep.
dump the price.
So they dumped the price, got the liquidity, right? Unloaded on you, buying the dip, and now they started to reaccumulate their bags. So they need to bring back the value into why Bitcoin has a long-term future, so that they can reaccumulate, pump the price again, and redump on people. Yes, exactly. So I like that. So fear and panic is pretty much where we are now. Maddie, there's that other.
Do you like emojis, Karim?
I love emojis.
What a question.
Okay, good.
This is awesome. Do you have the chart that shows the traditional one for the Wall
real
Street?
one?
Yeah, because it shows kind of like on the chart. I really want to show people where I believe we are, so they kind of get an idea. Because when you're able to follow the lead of last week, you get a nice little bounce. It pumps 50%, but you get to understand that exactly, Maddie. Thank you so much. So when it gets to capitulation, right, which was I believe where we hit that 30K, close to where that old base was, then you get that little mini fake bounce, right? Because we had the anxiety 2 weeks ago, 3 weeks ago. We were telling people thought we were crazy when you already broke that rising wedge. If you remember, when we first start talking about the Wyckoff distribution pattern and everything, we're telling people, listen, this is what's playing out right now. Pay attention. People calling us crazy, right? Second signal was there was a big rising wedge that broke out of that. That was running around, well, what was it, like 50K or 55K?
Yeah, about 55K.
Yes, that was the anxiety. People kind of heard about it, but didn't want to do anything. Then they got into denial, right? Then we got to like that 45K, or tell people, listen, if he doesn't retake that by Friday, it's not going to happen. And then with the excess FUD and everything, then panic kicked in, and then liquidation bots went to work. Over $9 billion. Insane. People are wiped out, not even back. It's crazy. And then capitulation was right around where we got to that 30K or 31K. But I need to, I need to understand this is where the pain of the bear market really, really starts. Because you see how from complacency to panic to capitulation, it happens fairly fast. And this is basically what we did in that 2 week period. But then, as you can see, it bounced, but it doesn't go back to where people think. Like the cognitive dissonance that you're hearing for some of the crypto furus, like Wells would call them, right, out there. No, it's going to come back and this is that, because they're actually pissed off that they didn't get to stay out their bag with all their indicators and like, oh, the bear market is supposed to do this and do that. And then obviously it always takes you by surprise. And by the time you realize what's going on, it's already too late. So they need people to stay being, bag holder. And Maddie, they also use like shaming tactics, right? They tell them, oh, you got to hold and this and that. You're a pussy, you're blah, 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 because they want you to hold so their price can go back up so they can unload on you. You see, they don't understand that with Hex is different. We're telling people not to hold. We're telling people to stake because they get the reward, which is the best part. So people need to understand that from that anger phase, which literally was a couple of days ago, all the way to depression, this whole phase can be what? 2 months? 3 months, 6 months, who knows?
Yeah,
if
it could be
the
a while.
economy doesn't go back to where it thinks, because again, on the quant game, we're talking macro. That's what the average YouTuber doesn't understand. That's why all of his indicator doesn't work, because he's not putting the macro economy at bay, which is traditional markets started to crash. So all those big institutions, what do, right? Well, portfolio rebalancing. They got to take profit where they can to cover where they lose money. So people thought the rand would have continued to 100K, but they pulled the rug because they realized, this is not going where we expect. Then you got summer coming around. You got the Feds talking about inflation is a thing now. And moving into 2022 and 2023, chances are they're not going to plan on doing any freemium anytime soon. So you could be getting into that phase. And that stability phase is the most dangerous phase because it's the most painful phase. And then from capitulation to anger, you can go back to 30K again. Bounce there for a while, stay there. Just like kind of like we went from 6K to 3K in the Bitcoin bear market, and just stay there all the way to depression. Depression can bring us down to 25K Bitcoin. Yes, I know it sounds crazy, the Hexicans, we need to prepare ourselves mentally. I don't wish that to happen, but you need to be understanding what's going on. So this is where those psychologies are kicking in. The reason why people get to anger is because they've been told, wait. And then they're like, I used to wait 2 weeks, the price goes up. Now it's been 2 weeks, the price is not going back up. What happened to my 60K Bitcoin, right? Or what happened to my 50K Bitcoin? So now that's how the anger comes in. And a lot of those people, unfortunately, are playing with money they cannot afford to lose. Or a lot of those people increase the leverage when the price crash in hope that it will go back up. So they see $38,000 Bitcoin. They think, oh, look, I added more at 30K, so it's going to go back up, right? And then it starts to trend back towards 30K again. And this is where the pain really hit. First bounce, you get hurt, negative 50%. That's if you're lucky and you don't have crazy leverage, because obviously 9 billion got liquidated. The second one is really what kills people. And this is where the anger and the depression comes in. And that's why the average YouTuber is not factored in, because he's failing to understand that the market is not what it used to be. The amount of leverage that we have now, we didn't have that back then. So this is where it's good when the price goes up and we didn't get any dip. We just blast through 20K, 30K.
So let me explain how that happens. Remember when we had that big liquidation weekend in March?
Yes, sir.
Or I'm sorry, was it in March? Yeah, actually,
April, yes.
We had one in March and we also had one in April. We had two.
Yep.
We had two big liquidation weekends, and then we got the dump.
Yep.
And that's exactly how it happens.
Mm-hmm.
You get the probe of the new lows every time, and then you get the major breach, and then that's it. Because people think, oh, it's not going to break. It's not going to break. It's going to hold like the last time, and then it just keeps going.
Yep. Because the first one was from, if you were to drive a trend line from, belief to thrill to euphoria, that was the first shot fire. It break that. Right. And then the second one was the other one that goes from optimism all the way to complacency. That was the heavy rising wedge. And this is why I tell people, this is the last step. Get out. And this is also when Richard told you, dude, the parabola has broken, because they don't understand that Bitcoin is still highly, highly speculative. So in other words, it's kind of the herd mentality. People know that this is supposed to go like a parabola. So when you break out a parabola, the fall, because it's so heavy, is going to be way worse. And like I was telling you guys backstage, people talk about, but some of the influencers are saying, oh, but it's only 3x. It's not like last bull run was 17x. And they failing to understand how log function works. The higher the price goes, the more economic energy you need to push the price up. Because when Bitcoin previous run did that 17x move, it was from around 200 to 250 all the way to the 20K. So the price was still very low and fairly easy to come in, right? Some of those institutions have been here for a while. They just pretend that they've not been here, but it's not true. And when you get from 3K, which we were, all the way to freaking 60 plus 65K, that's over 12x. But even if we say from previous all-time high, from 20K to 60K, you need a lot of money to move that kind of price. This is the reason why we have to pay attention to the crypto quant and what's going on in Wall Street and stuff like that, because Bitcoin is in a different ballgame. No offense, the little average guy is not going to have the financial energy to push the price up. So if you need to see that 10, 15, 17x that you used to have, first of all, that's a fallacy, because the long function won't permit that. Every other cycle, it diminishes the run in terms of multiples. Second factor is you have to factor what the big markets are doing. And when we're not in a good economic situation that we were before. So you factor that in, that creates problem. Third things most people don't pay attention to, we have way more freaking stable coins that we had before in 2017, which means back in 2017 or before, Bitcoin was kind of the entry drug. You wanted to go to Ethereum, all this other stuff, you had to buy Bitcoin first, which created some of those pumps. That no longer is the case. You can literally, which Hexicans are doing, which is smart, literally just buy stable coins, USDC or whatever, or Tether, and then move directly into your favorite coin, whatever that might be. Of course, Hex. Or, as we already know, Ethereum benefited a lot of that run, got some of that money too, because Ethereum did its 3x move as well. Went from the 1,500, which was the previous high from the previous cycle, 1,100, all the way to about 4,500, did it perfectly, and then exited out of that. So people need to understand that the reason why we say it rhymes is because it's not supposed to be exactly the same. It's supposed to be similar, but understand the big power at play that's going to dictate what the chart is going to do. And if you want to see 100K Bitcoin, which I don't think is going to happen anytime soon, you need to figure out what the big players are doing, not because we care about them, but because they are the only one that has the economic energy in order to make the price goes higher, right? You need more companies, more hedge fund. Heck, you need to start, well, we need to start seeing insurance companies. Those are one, because not only they bring big money, but they almost never sell because they use that for collaterals and things like that, which is a perfect transition for newsflash number one.
So, Karim, I'm going to let you catch your breath now, and I'm going to check in with the chat here because we got a bunch of super chats, and we want to make sure we get to them. Valiant Brand, thank you for the $3.69 super chat. You're talking about how Richard was just on stream with Mitch Ray, the big TA guy, and he basically had about 1,800 viewers watching, which is about double what Andreas Antonopoulos got.
Absolutely.
So we're happy to see Hex being represented there. And I think Hex is starting to break through in a lot of different social media channels, including this one and all the other streams as well. So it's really exciting times. Hex19, thanks for the $4.99 super chat. Oh, I lost my place. Too many comments coming in. That's why we don't want to lose them. Let's see. Looking good. Staked forever. Don't care about BTC at any price. Yes, I have some, but Hex is where it's at. I like that comment. Wake Dog 999 super chat. You guys rock. Keep on keeping on. Thank you so much. Appreciate it. Marco the Glass Hexagon. Can't believe it worked with Richard and Mitch, and we got a pump. Let's go. Hey,
shout out to Marco.
Hell yeah.
Shout out to you, Mark. Must be Tuesday.
Did he arrange this? That's so badass. Awesome. I'm going to speak to Mitch about getting on Quant Gang with us sometime. That sounds great.
Yeah, that'd be nice, especially if towards the end of the Quant we go over charts. That would be great.
And then Quadruple J here with the $20 super chat. Love you guys. Life-changing for the community with all the free info. Awesome.
You're welcome. And, Mexicans look out for one another. That's the goal. So
Crispy, on fire, Quant Gang. So Crispy helped do a presentation with me last week 2 weeks ago on Saturday. Hex Fire, financial independence, retire early, and
nice.
Great
that
materials that he linked to in the PDF on that YouTube page as well. So thanks for your contributions.
Everyone, please hit the likes. Very important. And share the streams. Post it on Telegram and all the channels. Let people know. So we're gonna talk about important stuff today. So thanks for being here.
Thank you again, Bran. Thanks to Rick Schmitz for being here, mod of Mitch's channel. Awesome. Great. So we got a lot of people joining us as usual. Marco was speaking to Mitch and Richard on the side, and they both agreed to do it last minute. How great is that? And other people can learn from this example of Marco and others reaching out and punching higher into different markets and different groups that are going to be interested in Hex and are going to have a huge quantity of people that need to be saved from the trading, from the leverage, from the rigged markets, right? Crypto was supposed to be a market that was for the people and not rigged. Well, look how that turned out. Not very well if you're not in Hex and you weren't in super early into these other cryptos that have changed, right? You update your worldview and you realize that Bitcoin hasn't traded on decentralized exchanges. Hex has done over 99% of its volume on decentralized exchanges. So even when you look at the definition of crypto, you start to lose sight of what it really means when you're using Bitcoin as the definition.
Absolutely. And a quick parenthesis that's very important to remind people, as you saw on Twitter during the crash, all of those major central exchange literally went out. Again, not surprising, right? Yeah. And they're going to tell you the narrative and the BS and the load we couldn't handle and blah, blah, blah. Dude, no. We heard that over and over and over. Hexicans, this is the reason why we learn and we adapt, right? Fool me once, right? Shame on you. Fool me twice, then who is to blame now, right? Understanding that difference. Because number one, they're too busy selling their stuff first. And number two, when the cascade liquidation really hits really, really hard, they have to shut it off. This is the thing that they will never tell you. And Wells can talk about that. Because if not, this thing can go to zero. Yes, I know it sounds crazy. They have to, because the amount of leverage that's there, when it cascades the hardware the way it did, And of course, they're gonna save themselves first
And
before
the
they save
sickest
anybody.
thing is their rationale, even though they'll never say it, is that they're saving other people by turning off the exchange, right?
Always.
Hell no. It's like the Federal Reserve telling you, hey, I'm printing the money to save you and save the
Yes.
economy, right? It's the same thing. When they're just right. How
Good
funny is that, right?
example.
Great analogy.
Yeah.
But when they know,
Yeah.
they're just trying to save themselves first because you have certain businesses out there because I understand how business works and cost of acquisition. There is exchange and other business in the crypto space right now that if the price of Bitcoin were to go below 20,000, those will just declare bankruptcy. They won't be able to sustain because it's so leveraged. They take loans, they also stuff. It's only sustainable because they use their coin to a certain degree for valuation and collateral, right? Well, so if it goes below a certain point, they just can't function and their stuff
Mm.
just disappear.
What
Look,
do you think, Wales?
let me tell you guys. I've been talking about this for a long time, and you guys are now going to see the realities of all of the knock-on effects of centralization in markets. Because Bitcoin is the literal poster child of now that,
Yep.
right? And I don't mean good centralization. I mean the bad centralization, the crap that we don't want to see, right? Because now, just like Kareem is explaining, you got all these levered up positions in Bitcoin post 10,000K, right? Like post 10K.
Yep.
So, that's going to cause problems. That's going to cause problems for a lot of entities that jumped into the game late, right? And what else are you supposed to do but dump, right? These people aren't going to do anything else.
Yep.
So now people are going to learn exactly what we've been talking about for months. Because here's the thing. Everybody's joining the party now, but Hexing is already, we were already here dancing. So, don't
That's
forget that.
That's right.
facts because we've been telling people for a while. And again, for people watching, what Wells is trying to say also in simple words is that I don't care how smart you think you are in terms of being a trader. The problem with the cascade liquidation is you might be thinking, like some people did, that, oh, my liquidation price, is like 31,000. It's way below. Bitcoin is at 50, 55K, whatever. I'm so smart. I got so much capital. I de-risk by adding more collateral, which is actually very risky to create your liquidation price to be very low. But you don't understand that things can happen that has nothing to do with you, nothing to do with your analysis. I can sit here and genuinely say Bitcoin wasn't supposed to crash the way it did. But then the data start acting a certain way. Wells and I, we saw the pattern. Like, whoa, okay, the game is being played here. We have to warn people to evacuate because this is how they're going to be caught holding the bag. And because they knew, because Maddie, they have all this fucking data. That's what people don't understand. That's what Arthur Hayes was so famous with those memes and talking people degens or whatever. They have entire trading desks. They know where everybody's position is at. Like it's the most rigged game you'll ever see, especially for futures and those margin trading because you have to have those liquidation price or you get infinite loss, which is crazy. So literally, they know where you are. So they know that when the euphoria is going to kick in, first with the help of obviously bigger whales and miners, which are primarily those whales, they're going to push the right price a certain price, create the shakeout, liquidation kicks in, the cascade effect kicks in. It's nothing new to them. They've done this many fucking cycles ago. They literally get to trigger. Then they load up the FUD on top of that just to add to the panic. And then they go fucking short. And then they make money in three ways. They make money by you getting liquidated. $9 billion plus. That's one. They make money on trading volume, right? Richard already told you that. Billions of dollars. That, I can't even calculate that. That's crazy. And they make money also by going short to push the price down even more. It's the same thing I used to tell you guys weeks ago about what's going on in Ethereum DeFi with the problem with the gas fee. They'll create the shakeout. Gas fee will go insane. People will panic. You can't exit out of your fucking position unless you're well and you have the ability to pay $200-$300 transaction fee, and you get stuck holding the bag. It's the same thing with the NFTs, same sort of stuff. They want it to be non-fungible, so it's not easy to move. You need a transaction. And if you don't have the money to transact, because you thought, oh, my gas fee, I only need $50. Well, guess what? During a high surge event, you that would never, ever be enough. and you will never know
and
that
and
that's
and
gonna
they can look, right, they have the full history of
everything.
fees and user behavior and how big your bag is, so they can predict
Yep.
if the transaction fees go up to a certain height, what you will do based on whether the price has gone up or down significantly. And so
Exactly,
then
man.
they'll
Well
know
said.
what you will do
Yep.
after the fees go back down. So they're able to model stuff in very
It's all
advanced
in the
ways
blockchain. They can
that,
model all the
yeah,
wallets, all the
yeah,
MetaMask wallets, how many Ethereum are in each wallet, literally. Because some people buy stuff and they have nothing
yeah.
else left. And then they can just say, okay, this is the threshold. What's going to happen? Boom, boom, boom. They create a shakeout and then you're done. The only way, again, this is why it's so powerful, right? The only way you're protected is in Hex. Because number one, first of all, when you buy the Hex and let's say you create a stake, well, you stake. So it doesn't matter. People emergency and say do crazy stuff, you get free coins on top of free coins and you're protected because you're not looking to trade, because we're not traders by definition, and we can just literally wait for the chaos to be done like it was. Then we're back to normal business as usual. The fee goes back to the reasonable area, well, before the full $500. And imagine with when Pulse comes out, it's going to be even better. So this is the only way you can protect yourself against those really, for lack of better word, almost attacks in the market. That's why they push NFT so much, because they're trying to entrap the coins. At first, it sounds good because it has a token economics value. Okay, more Ethereum's being trapped, price can go up faster. That's all cool. When there's panic, you can't get out of your position because you need to do a transaction and you don't have enough gas fee, so you can't make it happen. Same thing with Bitcoin. They do that with the futures market with all those leverage traders. They know exactly what everybody's liquidation price is. So they create the panic, miners dump, price goes down. They can't do it right away because they got to wait for the real FOMO retail to be like, oh, buy the dip, right? It goes to 45K, buy the dip, crash. Because you could have lost maybe 20, 30% of your portfolio, right? Price goes down 15%. You think you're so smart, you load up another 10x leverage. What happens is now your risk factor just doubled. Then the price goes against you another 5%. But now it counts as a 20% loss because it doubles from the previous 20% loss you had. And then what do? You buy the dip again, add to the portfolio. And then when the capitulation wick kicks in, you get liquidated with everybody else. And then thank you for playing. And that's what people need to be very careful about. Okay. That's what I was pointing out the crypto quant to remind people where the big buyers are, because those are the only one that's going to come in and scoop up those free Bitcoin. And Maddie, if I may, I think it's a good transition. I want to share my screen real quick. And show again, it's not looking good. Again, guys, this is Quant Gang, right?
So I think to that point, I've got another example here. So I got an email today from somebody who is trying to recruit me for an influencer referral program.
Oh my goodness, you get those too? Oh boy.
And I can get high referral commissions for spot leverage ETF product, trading fee rebate, blah blah. Like, come on. You think I need that? Yo, I got Hex.
Exactly. It's hilarious.
It is. So there's lots, that's how it happens, right? Is, they get you early when you have a YouTube channel, and,
Right.
Then,
You got no choice.
it seems like
almost.
just a referral program like you do with a Trezor, except you're leading people with the Trezor to have better security. With this type of a thing, you're leading people, even if it doesn't look like it at first, you're basically signing people up to get addicted to leverage trading and
Absolutely,
to get fed to the algorithms that are going to wreck people. So,
which is very dangerous. And again, they do it just like the psychology of like, hey, you can't swim. Oh, let's come here. Let's just use the pond for a little bit. Let's just do a little bit of that. And the next thing you know, because the average person is not going to publicize the loss that they have, but we know the data.
Yes.
We know it's 97% people are getting wrecked. You know what I mean? To the point where we have to literally go into the liquidation wall of shame to really size what is going on for people to understand. So this is where, again, this is another reason why Hex is so bullish in the bear market, because you're protected against all those shenanigans, because this is next level stuff, which you have no control over, which means is going to happen So unless you're in a product like Hex, when you can protect yourself, earn your yield, you're not here to trade. So you can protect your psyche, panic, denial, anxiety, all this other stuff out the window. You're not affected by that because you're staked. That's the whole point. So you don't get tempted to do something stupid, you know what I mean, and then get yourself wrecked. Imagine you moved out of Hex and then you got to any of those coins that went and crash. You would have lost all of your gains, all of the hard work that you have done, all this other stuff, wreck yourself, probably hit some more slippage along the way. It just doesn't make any sense. So having that protection mechanism is really what, set us apart. And that's why we're a great community. And to Maddie's point, we don't need to worry about referral link BS and stuff like that. We get paid every day. So again, that's the beauty of financial freedom. We don't need to go sell our soul to get a buck.
Yes. And another thing that I'll just throw out there that's kind of a new psychological trick that I'm using this week or for now is I used to have it set up so I could check to see how my entire bag was doing of Hex. And that's exciting for a little while. If it goes up and down so much, even with the smallest market differences, up 5%, and it's like, wow, that's more than I make in a day or a week or a month or something, right? But the idea here is that I created a different portfolio with just my 3% liquid or whatever I have. And that's like so much better to look at. Now that's the one I look at. If I really want to know how much all the Hex is worth, then I can go and look at that other portfolio. But I have it so that if I'm just checking the price, I don't want the emotional swings back and forth. And so having a separate screen for that has been helpful for me.
Hence the beauty of the dream account, Maddie. Separate by himself.
Keep it separate.
Well, and then every 6 months or a year, if you have a down day, you just go look and see the power of just holding strong, delayed gratification. You get that little nice kickback, and that's what feels great, And Hexicans, this is our golden also, because now bear market is, I hate to say, but it's beautiful for us because we again with the best house in the shitty neighborhood. We have the best yield. Get ready. Influencers going to start talking about, forget about your USD bag. It's about getting more Satoshis and blah, blah, blah. Well, guess what? We don't need that shit because Hex already does that. That's what the high yield interests already do. And you don't have to be a hero or go and get wrecked. It just does it to you every day, 8 p.m. Eastern Standard Time. That's it. Until the next daylight saving, like clockwork. And that's really what's going to set us apart. And as we continue to accumulate, right? Because remember, true accumulation never ends. Now we can buy Ethereum at a much cheaper price. You used to buy at $4,300. Well, guess what? Now you can buy it for $2,700. And this is a good transition to what I want to show.
So here's a super generous donation from Silver the Antidote. Thank you so much. We're going to put this money towards him buying us a drink in Vegas. And he won't be there to celebrate, but he's asking us to keep doing an amazing job teaching. Yes. Thank you so much.
We will. So Maddie, can I share my screen real quick?
Yes.
Quant.
There it is. Perfect.
Boom. Let me know when I start sharing.
There it is.
All right. Perfect. All right, guys. So if you remember from last week, right, when we had that crazy negative, it got to negative 20% at some point, and then obviously the crash, which was predicted, and the premium tried to close. And remember what I said. The premium is going to try to close based on demand, which he tried from negative 20 all the way back to negative 5. And then the bounce, but guess what? It's back again, negative 12. And this is roughly where we are now, 38K. So what does that mean? Again, to translate, quick math. That means that people right now, this is Quant Gang. This is now like feeling. This is facts. There's people right now, it's 9 p.m., but early today, and tomorrow, there's people right now buying Bitcoin on the grayscale premium, which is negative, at negative 12%, which means that instead of buying at 38K that you're seeing right now, there's people, as we speak, buying Bitcoin at around 34 to 33K. Because if it was 10%, that would have been roughly about $4,000. Shave off of that would have been 34,000. So near that previous bounce that we have, that area, people are buying Bitcoin at $20,000 to $33,000 right now as we speak. The premium constantly goes negative, which means just like accumulation phase goes, or reaccumulation based on Warren Buffett style too, is you're not trying to catch the falling knife. What they're doing is they're placing limit orders. That's why when it first hit 30K, there was like $2 to $3 billion that just show up in the exchange out of nowhere from USDCs and the like, and just bought that dip. That's the first wave. Then they're gonna wait. They're gonna wait for the price to come back. Now again, bear market, so people to hit that anger phase again, and the people at, let me go back to Bitcoin. The people at what is it? Fund data here. The people at Grayscale are still, as we speak, sadly, the total number of Bitcoin is still trending down. It's still trending down, which means, again, we are in bear market. They are selling it off. The thing that they said they were never supposed to sell is still trending down. So you have GBDC still negative 12%, which means people are buying Bitcoin at $33,000 right now, 33 to 34,000. So you need to be warned. Okay, but also, just to put in comparison, Ethereum here, see, Ethereum was flirting around 0, right? 2%, 1%. But now, even after the dump right here, -5, but then the bounce came in, but then now the premium is actually -8%. It's a little bigger than it has been in quite some time, because obviously, literally a couple of days ago, people were buying at $2,000. So now it's at 2,700. But again, Ethereum has a slightly less negative correlation compared to Bitcoin, but that also tells you, which makes sense, because if Bitcoin premium is right here, -13%, which means people are buying it at $33,000 and change, 32 to 34, that means it's only fair that Ethereum right now, -8%, people are buying Ethereum right now at $2,400, 23 to $2,400, which means it might go back and revisit that, because this is just the first bounce before it comes back. So be warned, understand that what we need is the premium to at least trend towards 0, especially the Bitcoin one, because right now, oh man, it's still ugly. It's still not looking good, which means as the time continues to stay, the anger phase is going to continue to stay, because again, people buying on Grayscale, they're not going to go buy on the market. That's also a big message, because usually common sense, quick math, why would you buy on the market at 38,000 when you're a big institution? You can go to Grayscale and you can buy it at $33,000, right? It makes absolutely no sense. So you will do what makes the most sense for you, because money chase yield, money chase the path of least resistance. And then you get that arbitrage opportunity again, because it's buy Bitcoin at 33,000, 34,000, and then sell it on the market at 38,000. But they got to do it the smart way. Remember what whales do. After creating a crash like that, what they try to do is they sell by doing limit orders. So they're going to let the thing bounce a little bit. They're going to make you feel, oh, yeah, we're going back up. Yeah, bull market is back on. And then they're going to just put the limit orders for you to come and take it off their hand. And if the price goes up too fast, they're going to liquidate again. The same thing happened 2 days ago when he did the first bounce, and then he tried to go to 42, 43, got rejected, made the new low, came again. Right now, people are talking about, inverse head and shoulder, this and that. Dude, it's the 4-hour chart. That's nothing. That's garbage. When you compare that to the actual long-term chart, which is, let me go back here and go to the Bitcoin chart. Again, DMI already told you it's bearish right now. So when you go on the 4-hour chart, people are saying this is inverse head and shoulder. Yeah, that's cool. But you can easily come here, get rejected, and then head to the next zone, because I told you this is the buy zone, because it's literally where the 61.8 Fibonacci retracement is. So it's cooling off now, but he might be going for another run. But again, all those are short time frame. The key one that we told you since last week, which tells us we're in a bear market, is the weekly one. Look at this. That's a cliff, because this is what it did. It crossed, which is now tells you this is the beginning. And when it crossed like that, you have to wait for the intensity to go back down. The same way here, 2017, it crossed here. And then this is what a bear market does. It barely moves. It doesn't really buy. It doesn't really let. This is how liquidation bot works the best. Price barely go up and down, 5, 10% up and down, just dance in that range, waiting for the red to cool off. But it could just do this for months. And of course, lower high, lower high, lower high. Same thing we're starting here. We could be doing lower high, lower high, lower high for a while. So as long as you understand that big picture, that's the key. Same thing here. Back in 2013, across lower high, just still hanging around. So before you start worried about are we back on the bull market or whatever, you need the DMI to cross back on the weekly chart. Whatever happens in the in between, whatever, don't be a gambler, don't get wrecked. We might get a temporary bounce, but don't get your hopes up for the long term. So that's the key. Because again, this is where the $34,000 zone is, 34 to 33, which is as we speak, this is where institutions are buying Bitcoin right now using the GPTC premium. And it makes perfect sense because the negative premium tells you where the bid support is. It tells you where the buyers are. So, which is perfectly right around that zone that we did before. So if we're lucky, we might hang out here temporarily, go test that, and then probably get rejected again to the long-term trend. But if the bull market wants to come back, this level here, the 45K is paramount. If we can't take back above that, forget about it. So that's usually the key. But again, back to here, this is negative. This is bearish sign. This is also negative 8%, which is the highest been in a while, which makes sense because Ethereum will follow Bitcoin to some extent. And the Bitcoin on grayscale are still trending down. The total amount in the asset is trending down. It's losing about 1,000 Bitcoin every 5 days or something like that, 4 to 5 days. So that's not good. They are selling. So because again, they have to find a way to cover the premium one way or another. So yeah, Maddie, thanks for letting me stop.
Yeah. So they, because Richard has said that they don't sell, but then people keep bringing the facts in and letting
yeah,
him
no,
know.
usually
So-
they
so
don't.
he says,
Yeah, they
Yeah,
haven't scaled
show
for
me,
years.
like,
But then when I saw that, that's when I went crazy. I said, guys, sell this shit. Because if the biggest holder is also selling, and by the way, I want to make something clear. They're selling out of necessity. This is very important. They're losing millions of dollars because every time the premium is negative like that, you see, it's fun when the premium is positive because you keep making money left and right. You're owning the actual Bitcoin. The asset value is going up. You're probably going to go borrow more money with that because your collateral is more valuable because they were also buying back their own stuff. Let's not kid ourselves. They were buying Bitcoin for themselves, plus allowing people to buy it through the Grayscale Trust by giving them money so they can buy more Bitcoin. But remember, they're the only one able to redeem the Bitcoin, which is why I can confidently say that it's Grayscale selling because they're the only one that has the authority to sell because as another person coming in, you can only buy the share in the trust. But what the big investor can do, just like a proper businessman, like a pawn shop, I can say, well, I don't think it's worth that much. I'm not willing to buy. And because nobody else is buying, because the retail investor is tapped out, he already liquidated all his fund. He's waiting for the price to go up, right? Wink, wink. And the next buyer that comes in is the big institution, but the big institution is like, I'm not buying you $60,000 Bitcoin. You crazy? I'm not doing that. And then he's basically saying, this is my price. Take it or leave it. So then what ends up happening is the premium gets negative, very, very high because nobody else is buying. And then Grayscale has to cover it one way or another. This is why there's an article a couple of weeks back, and it doesn't go to mainstream media, so nobody really watched that, but I tracked those. There was an article that showed they sold over 1,000 Bitcoin just to cover the premium. They're basically buying back their own premium to try to bring it near zero. So they have to do that. So periodically, that's again the theory behind the bear market. Because if nobody buys, sooner or later, they have to sell. Remember, they have employee, they got stuff they got to do, things they got to pay. So if the flow is not coming in, they will have to sell all the way to where the premium can be reasonable to attract the new buyers to come in. So I want people to really understand that logic. It's not because they want to sell, it's because they have to sell. That's a big deal. And those data, average person, average YouTuber is not even tracking that. Keep telling you that, hey, it's going to 100K, don't worry about it. No. If the premium doesn't fix itself, you can't get a higher Bitcoin, period, because nobody's going to buy something more expensive than they have to, right? Well, we should speak on that too, because I need to understand.
Yeah, I mean it's very basic, right? You have an entity that's pricing something at X, and they're the ones that essentially control the market, and that's what the price is going to be, right? It's kind of like I've explained before. This is why the Federal Reserve can, destroy the dollar because it controls the pricing of that currency, right? This is why you have to find other places to put the income you earn because if you keep it in dollars, you're just making a mistake. So, same situation here. They're the ones that basically are controlling the flow of Bitcoin because they are the biggest holders that are active in the pool, right, or in the pond, so to speak, for now.
Mhm.
So when they splash around, it affects the market, and this is what we're seeing now. I mean, we went straight down to 30K, straight down.
Yep. Fill up that premium gap. Amen.
Straight down. And it was literally, we talked about it and it happened. Boom, boom. Just like that.
Just like that.
It was crazy. It was crazy because none of us expected it to happen that quickly, but that's what happened.
Yeah, because guys, remember Hexagon, this is the Quant gang, right? So we trying to put our feelings away. Listen, we all want to hire Bitcoin, like Richard said many times. We're gonna get to a hex to a dollar faster, but we can't deny the evidence that's literally right in front of us.
Right.
And the reason why that data from Crypto Quant, especially Grayscale, is just even more important because this is not even like a moving average or we think, because again, moving averages are great, but remember, nothing beats the price. The price is price. Moving average is secondary. Wells talked to you guys many, many times. It's a good indicator to have, but it's always secondary. Right? It's like a second, it tells you after the fact what's going on. The same way right now, the trend has changed severely, but the average YouTuber is not going to call the bear market until probably 2, 3, 6 months from, at least 3 months or 2 months from now, when the moving average has completely crossed, and you'll be like, oh my God, we're in the bear market. And we're like, bitch, we told you a long time ago. Because we're tracking the thing that matters first. And for those of you who understand me talking a lot about the DXY and how, the big D swinging around. So in the small crypto space, Grayscale and the Grayscale premium is like the big D, the DXY, because it really kind of dictate monetary policy, the premium. They dictate what the price is going to do because Grayscale is the biggest buyer, is the biggest holder of Bitcoin. So the simple fact that the premium is negative, it means that their buy is not going to be net positive. It's going to be net negative. And on top of that, now that they're liquidated, although very small, because again, you have to really track the data on a day-to-day to really notice it because they liquidate little by little. But again, we're talking about $40,000, $50,000 Bitcoin. A thousand Bitcoin is real money. It's not like, you're selling a 1,000 Doge. You know what I mean?
Yeah, exactly.
You need
So
to
that's a key insight, right? That you've had and that you've shared with other people on this stream is that the Grayscale premium is like the DXY and that it does dictate the market. And you observed that by looking at quantitative analysis and by understanding market fundamentals. And it turns out that is freakishly right. And
Amen.
Go figure.
I think if the rest of the market really knew that, then it wouldn't necessarily hold true. So that's kind of key insight that you're on the cutting edge of understanding the market, I would say.
And that's, Maddie, that's the beauty about sticking to the facts. Because the problem is, especially those influencers, I hate to pick on them, but that's so true. Even those who pretend that they've been here many, many cycles, but they don't understand that they call cycles for a reason. Everybody likes to talk about, oh, yeah, the cycles that are right. And then when the cycle comes and then they panic, they don't know what to do because they never really learn. That's why we like to stick it to the facts and take the emotion out of the window. That's why you have to have that level 3 understanding, really understand what the market does. It's like Karim 2 + 2 = 4. When this happened and this happened and that happened, this is the result. End of story. I don't need to like it. And honestly, it was a bad news to say, but it's, I don't want to say fiduciary duty, but it's almost like for my community is the least I can do. And that's what Will's trying to do as well. That's what we told people around because we saw the indicator. And some of those early indicators, the reason why you get to be early is because you actually are that contrarian. Because sadly, there's always going to be people getting wrecked. That's the sad truth. The question is it going to be you? And I didn't want our community to be wrecked on that. But because I understand how the mechanics goes, it's kind of like how Ray Dalio like to talk about the economy like a machine. When certain things are met, This is what's going the outcome is going to be. The same way I say, if the DXY, if the interest rate rise, if the 10-year yield rise, it will cause this. Then the DXY will rise, and then you will cause that. And next thing you know, bring the stress because it's so over leveraged and on borrowed money, the whole thing will collapse. And this is why that was like the early indicator, because everything is connected. That's why it was a chess game. We literally told you when this will happen, months in advance. This is going to happen. They're going to raise the rate. They're going to play the narrative. They're going to tell you Elon did X, Y, and Z. That was before even Elon went crazy. I used to joke that Elon's going to fart, woke up on the left side of the bed, because that's what he's doing.
Yeah, that's true.
But we gotta keep it real. We can't say when he's doing something, oh, it's great, and when he's doing something against, oh, it's market manipulation. We can't say when the Bitcoin premium is severely positive. That's when Michael Saylor was able to load up so much like he didn't care, because he knew there was demand that he was also creating by talking to those people, and he could confirm that demand by looking at the grayscale premium. That's why he was so confident to convince his board and get this other stuff comes in, right? So when this thing happened in a positive way and you see Bitcoin rise, everybody's happy. But then when it's negative, they want to say, "Oh, it's fun. It's this. It's that." No, you can't have it both ways, because it either does it or don't. Because if not, then how do you even know that your analysis is correct? If it's just going to be based on sentiment, meaning you take it when it's advantageous to you and you don't take it when it's not. It's like a double standard. No, you got to stick it to the fundamental, because you understand the mechanic. So right now, again, the bad news, like I told you last week with Wells, we're going to check today to see where it stands. And guess what? It's still negative 12%. Now, what does that mean? That means that we're down. We are set for another dip. Do I want to say to you? No, but that's what the data is telling us. So get ready. And you compare that with the Wall Street cheat sheet and the psychology of market, right, Maddie? Because we're getting to that anger phase. The longer we don't go back to 45K, the more frustrated people are going to get. Yeah. The more angry they're going to get. Because the thing about margin call, people don't understand, which is also nasty. Not only you can almost get liquidated, but a lot of the time when you're in the red, Maddie, oh, Wells, I need to talk on this for like 5 minutes at least. You borrow money, Maddie, you pay daily interest against that money. It's insane. The funding rate can actually kill you. In other words, you didn't get liquidated, but the daily payout you have to pay in interest for the
that's variable. That's not fixed.
Yeah, because it's based on what the market is doing. Because the more
supply demand,
the more people waking up realizing, oh, this thing is doing. Then you're gonna be incentivized to close your position at a loss. You didn't get liquidated yet, but you're in the heavy red, and you have to close the position, because every day that goes by and the price doesn't go back up to where you purchased the thing at or went long or whatever, then you have to pay that funding rate. You have to pay that daily interest, which could be hundreds of dollars. And by the way, that's money that's never coming back. So every day that goes back, your negative P&L increase, Maddie. It's insane. So then you need more money. See, people don't understand. It's counterintuitive. When the market corrects 50%, for you to get your money back, you need actually the market to go back up from the low almost 150%. It's not one-to-one. See, people don't understand that, right? Well, because they need to.
It's not one-to-one.
Yeah, it's not, because it's in a logarithmic phase. The same way, because they calculate negative 50% from the top, from the peak, and that's what creates that you just sinking a bigger hole for yourself. And then some of those liquidation, they were forced liquidation. That's what they call cascade. Yep. There's also many other liquidation waiting to happen. And when I say liquidation, I mean people that are just going to close their position at a loss, because the funding rate is going to keep being more and more negative. And then at some point, they have to cut the cord and they have to take their L. Because if you're down, let's say you're down 50% on your portfolio, negative $50,000. I'll just give you an example. Let's say $100,000. You went long, you're down 50 grand. You have the 50 grand left. But then maybe for that other money that you borrowed that got you into the red, maybe you have to pay a daily, I'm just giving an example. Maybe your daily interest on that money that you borrow that you use to go long is maybe, I don't know, $50 a day. And I'm being nice because, like Will said, there's crazy interest rate out there. Crazy. It's crypto. Traditional market, to some degree, the interest rates are somewhat low. If you're lucky with big amount, well, it's like what, 5%, 8%.
Maybe, yeah.
Maybe, and that's nice. That's nice, Matty. In the crypto, it's even worse. And the more money you borrow, the worse it gets. So let's say it's like it could be even 15%, 20%. Because it's it's like a credit card. Yeah. People are crazy because it's on an exchange. Because you're thinking like a crypto. You think, oh, what's 50%? Let me borrow this. It's 25% interest rate annualized. Okay. So they're gonna borrow the money. Oh, it's high interest rate. But my shit's gonna double next week, Matty. What do I care? Well, it's like putting on my credit card, like, oh, within 30 days, I'll get it back. You see, it sounds fun until the fucking market switch on you. And now, the worst part, you're in that hope phase. You're hoping it's gonna come back. It's gonna come back. It's gonna come back. And every day you pay $50, $100, interest, and it adds to your P&L because it makes you more into the red. And it's gonna get to a point you're gonna realize, oh shit, it's not coming back. Light bulb moment. And then what's going to happen is you're going to close the position, which is going to be another mini liquidation because closed position means you have to sell back to return the thing because it'll sell back to the market and then you'll take your loss, so to speak. That's going to create more downward pressure. And this is another thing about the bear market people don't understand. All those people who got trapped, 40K, 45K, 50K, and who are fortunate enough to still hold, even though they're in the red, but they're panicky as hell right now. Matty, what do you think is going to happen as soon as the price goes back there? What do you think they're going to do?
Buy high, sell low.
Or like the psychology, they're going to say, get me out. So they're going to sell, which is going to create more selling pressure, which is why the bear market is the bear market. Because the people who lost a lot, but fortunate enough to not be liquidated, their only hope right now, because they're so in panic, is I need the price to come near my entry point, and they'll be happy just to get out at a break-even point, which is what adds extra selling pressure in the bear market, which is why it's hard for a coin to revive. That's why it takes a while until all those liquidations are out. All those people who are waiting, the price get back to the entry point, just be like, I'm done with crypto and all this other stuff. Those are going to be the people that's going to create that selling pressure. This is how the dead cat bounce is actually created in the psychology. People don't understand.
Dead Doge bounce.
Yes. Because people get caught by surprise, heavy dump. It's so bad that if you're not already liquidated, you're like, oh my God, I only wish to break even. And as soon as the price trying to bounce back up, they're going to be like, get me out, because he bounced, and then he start to go back the other way. The same way, Mighty, what do you think? People bought that $30,000 dip. Make no mistake. Some people did. It hit some heavy limit orders and it bounced. That means some people are, right now, as we speak, there's people who are 30% in profit. It almost got to 45K, which was almost 50%. What do you think they're going to do? They're going to be like, oh, yeah, 50%, free money? Yeah, I'm out. Get me out. I'll buy back again at 30K. Because that's what they're going to do, because it's the easiest thing. The same way if they're hoping to go to 45K and they wait a week, oh, it's not happening. Oh, it's doing that slow, it's doing that slow death again.
Yeah.
They're going to sell again because they're in the green. They're not going to worry like the person that's worrying for the 50K Bitcoin because it's in the red. Those people who bought at 33, 32, 31K, they in massive profit right now, 30 to 50%. So if the price is not going up again and it's losing momentum and making another lower high, which is another sign of the bear market, right, is lower, and lower highs. So they'll exit there, let the price fail again, put the limit order, and just wait.
So my favorite move that these centralized exchanges do, like BitMEX, Arthur Hayes on the run or in custody or whatever, only a billionaire to get arrested ever in the history of humanity because literally he's doing this to people, right? He's just turning off the servers so people, and then doing a scam wick on his own so that he can just collect everything all the way down, all the way up, clears both sides of the order book. But
to be fair, he created that, but Binance took it to another level. Binance got 125x leverage. Okay, so
no way.
Yeah, Matty. Ask Wells. I'm telling you. So Arthur Hayes might be the guy that created it, but the rest of the crypto market and Binance, they took it to another level. This is the reason why everything had to shut down. And Matty,
Arthur was greedy. He thought he could just live in Seychelles in his in his fortified
I wouldn't be
palace.
surprised if you write a check and then 2-3 years from now he's free. Trust me.
Okay,
He's gonna write
yeah,
a check.
but
He's gonna write a check.
I don't know. He's doing like he's not doing as well as the Binance people with fooling everybody. So
Yeah.
you got to take it to the next level, I guess, right?
Amen. But Mexican, please take it as a learning experience. And this is the reason why people go crazy when they're like, how the hell this market is acting like that, even though we're supposed to be, mature, trillions of dollars, blah, blah, blah. It's because people don't understand that the liquidity on Bitcoin is already low to begin with. And then you add all this crazy leverage, which is done on purpose, make no mistake, to liquidate you. Richard talked about it many times. What if on crack and all those scam weeks and all this other stuff? It's done on purpose. And the scam week always goes, Maddie, to where the maximum pain is. You can't make this shit up. Okay? They all learn from Arthur, and they're doing it because it's like the goal is to get you liquidated. And the goal is to make you so complacent. Again, back to the Wall Street cheat sheet, the complacency phase. That's why people are sitting right now, those who are liquidated, kicking themselves. Man, I should have, when we broke 50K, man, that was a signal. I didn't listen. I didn't watch the Quant game. Or I did and I ignored it, right? I didn't. Like, we proved you. No, I'm so smart. I've been doing this for a while. Because you got all that opium, all that bull market. Your shit don't stink. You bought Bitcoin at 3K. 65K, you think you're an expert fucking trader. You never done a business in your fucking life. No offense. You got that overnight money syndrome. You don't watch Maddie's stream when he teach you how to stay cool. And I told you all the time, stay broke, not poor. Big difference. Big difference. Even over this weekend, when I was away, my friend's bachelor party, whatever, I didn't sell anything. And it was something that was already pre-planned, put money aside for that, done. Because I knew keep the main thing, building wealth. That's what we're here to do. We stake for 15 years. Maddie, we're going to be talking about those. We have at least 2 more of those. At least before 15 years stake ends.
Yeah, that's true.
We're going to be celebrating those. Those are the best time for emergency and stake penalties.
Yep.
Oh, yeah.
Oh, my God. We've been getting paid lately. That's crazy. Do you guys remember? Like 2 weeks ago, there was days we almost get no penalties, nothing, 0.
Yeah, now all of a sudden there's a flurry.
We're getting paid. We're back to 5 cents. What do you think is going to happen? Who's going to sell the hex now? We're going to 10 cents, easy, and then we go to 20 cents because who's going to sell it? You got no hex. We're holding the fort. We're getting paid every day.
Yeah.
And now we're in the bear market. No more easy 100x move, unless you're in hex.
So check it out, guys. A couple of things. For a while, I've been explaining to people exactly how markets operate. You have the mania of where they try to get all these normal entities on board the crypto through Bitcoin, like the PayPal, the MasterCard, the Visas, right? We pointed this out. That's a sentiment check. Sentiment check is the best indicator for any type of extreme move in the market, right? And this is what we just saw in real time. Right, we walked you guys step by step through that process. Just be sure to not forget it because it's critical. That's how you look at the markets for real.
Yes.
Hell yeah.
And that's how you protect yourself against your own emotion. Hexagon, this is what we say, being staked is one of the best things you can do because sometimes you want to protect yourself from yourself, because as much as we talk about those things, remember, we're human beings too, okay? Emotion can run high at crazy times. So having a mechanism that allows you to protect yourself from yourself is invaluable, especially in those times, because you could have been liquidated literally right now if you haven't been staked and doing all this other stuff or not watching the streams, which is important. That's what
in therapy. Yeah, we call this be smart, not strong, right? And that means be smart with a smart contract and lock your money on a ladder if that's what you want to do so that it's there for your future self, because all of this news is just noise, right?
Exactly.
All it is it's there to profit from your emotions. And if you can't always control your emotions overnight, right? Because people are literally trained and conditioned to be more emotional if they're out there seeking information or if they're, just paying attention to what's going on in society. And that leaves people with pretty bad choices. What am I supposed to stop exposing myself to all the the FOMO and to all the scare tactics and media sensationalization, right?
Mm-hmm.
And then you actually cause yourself to become more sensitive to it when it does leak through your attentional walls. And so just skipping all of the noise and saying that you're going to create a staking plan and then stick to it, that's why people in Hex are doing so well. That's why Hex is able, just from a from a basic perspective, it's able to do better than all the other cryptos, because buying and not selling is literally, that's the mechanism that causes price to change. And so everything else, it's not as important as being smart, and thinking that you're going to be strong really isn't always gonna end up serving you well. So
Absolutely. And to take it a
thank
step
you, Seth.
further, because we love Hex that much, is the fact that while you're holding strong, you're actually doing yourself a favor because you're also getting paid. Again, it's a function of the mechanism. This is what set us apart from everything else. And moments like that, moments like in the bear market, when you see the panic, that should be another bullish indicator to make you realize how valuable Hex is and how the system works. If you play the game the way it's supposed to be played, it's literally, yes, I dare say it, it's literally market cycle proof. Because no matter what, you are getting paid. Bull run, bull market, bear market, it doesn't matter. Whatever happens in the news, it doesn't matter. Every day, 8 p.m., a T-share will pay you, period, full stop, end of story. Hex clip, I hope you got that. That's very, very important. Because once you also understand, which we talked about at length, where you never sell the principal and you can live literally off the interest, this is what wealthy people do. This is literally how you win at life. You want to get enough assets, generate income from those assets passively if you can, because when time works for you, it's the best thing in the world, because you get to have that financial freedom. Then you will never have to worry about what the price does, because your principal will always be safe. The interest is literally what you get your leave off of, which is great. And as long as you keep generating that assets, you're great. And then by the time the price is way out there above your entry point, it matters even less. So every dip is just an opportunity for you to generate more of those T-shares, income generating asset, at a cheaper price. That's the only thing I look at. It's like, oh, wow, I get to buy another T-share for, while it lasts, for less than $1,000, which again, by the end of this week, could be well above that again.
History.
Yeah, because everything is rising. Staker class is rising. Just over the last week, we picked up another 400 new stakers. That was awesome. I looked at that stat. It was pretty cool to see. People are waking up. We're punching through different, new spheres of viewers, which is great to have. And for those of you who stay for the long term, I know if you're watching on Staker app too, my wallet has gained another 2 positions over the last 2 weeks. Literally moving up the ladder, just doing the right thing. And adding to your position, of course. So those things matters too as well. Amen.
So yeah, guys, just really, really, and try to internalize, because we talked about this for months. It's a great lesson in how markets actually work in real time.
Amen.
Right? Like we walked you guys through the distribution, accumulation phases months before people even thought of it. So just understand the quality of the thought process that's going on here. Take advantage of it. Study the things that we're pointing out to you, because they're important. You don't want to get caught slipping like a lot of these people just did. So please be advised, and please respect your pocket.
Facts. Respect your pocket. That's definitely important.
I have some news to share with you guys.
Great.
I have started learning coding again, and have done a deep dive into JavaScript and React, so that I will be able to make my own mental health apps for crypto.
Oh, nice. You'll come right in handy, Maddie. They need you.
Yeah,
I'm excited.
How to stake.
That's right.
How to not emergency end your stake.
Yes.
Yeah, right. You will be right on cue, so that way people can take advantage of it. So, because they need it, seriously, they need it. So,
yes,
and again, we're gonna keep monitoring things. Again, if crypto quants start to say different things, if whatever, as you guys know, me and Wells, if there's a major shift, we'll even do an emergency broadcast if we have to. But right now, stay vigilant. stay ready, build your ladder. Remember what we signed up for, right? Set up your dream account if you haven't. If you're new watching this, welcome to Hex, welcome to the fam. And, take the time to watch the streams and understand how valuable what we're sharing is and also how valuable Hex is, because that's really what's going to
And
continue to set us apart. And I wouldn't be surprised if, again, we reclaim that top five, top three, and then on the way to number one spot.
And if if you listen to Karim and WhalesOnly and myself, you'll notice that every day is an emergency because this is the absolute last chance to get T-shares at this cheap of a price in terms of Hex. And so it behooves you to pay attention and to act. I know that's been one of my winning strategies is whenever I'm watching a live stream and I get really pumped up, whether it was RH back, when I first got into Hex or, this group now, it's, these are the types of nights, Tuesday nights, I like to start stakes. I like to buy Hex. So
Yeah,
Time
those are
is
awesome.
everything, baby.
We
Time
always
is
get a
everything.
pump on Kong Gang, understanding the value there, and then getting people educated too, so they'll get to see. But again, very exciting. And then we haven't even launched Pulse Chain yet, so that's going to get even better. But yeah, again, understand the long term value because T-shares are extremely scarce. They're the single most important thing, as we always talk about, which we will continue will, because we never know whoever could be watching this and be their first video, so they get to understand. So repetition, mother of all skills, and understanding the macro environment. We have something
yeah,
positive. Also we can say about the macro right now. The DXY did went below 90, and as you guys know, I mentioned that that's a big level.
Yeah, it's
That means
positive
that,
for us, not
yeah,
for everybody
exactly.
else.
So they haven't completely pulled the rug off of crypto yet. So this is good for now. So and by the end of the month, Ethereum has one little drama left to play, one act, EIP 1559. So we're hoping, but staying vigilant because crypto quant is saying otherwise. But we're hoping that when EIP comes in, we might get, a back of 3K, $3,500 Ethereum. Bitcoin can stay stagnant where it is, and then if just the dominance rise again. But again, it all comes down to how useful the EIP is because the volume needs to be high enough to create that deflationary event. So for people new to that, the token burn that they're gonna do is going to allow Ethereum to potentially be deflationary because it's still printing new ether each block for the miners. But if the volume of transaction is high enough and higher than the new inflation being issued, that's how it goes deflationary. Now, we need high volume. But then again, like Richard perfectly said, bear market kind of clears some of the fees. So it's gonna be, I think that's what's gonna really dictate what the EIP effect is gonna be, in my humble opinion. If the volume is super strong and stays strong, and we get less vampire attack and it stands on Ethereum, then yes, that's gonna make it deflationary. It's gonna be a good narrative to have. Boom, 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 pump the price. But if it turns out that it's not really deflationary, it's just kind of business as usual, then that hype might end up being a buy the rumor, sell the news. So again, this is Quant Gang. We're just backing everything with facts. We're letting you know the two scenarios, and it's gonna be whichever happens based on what the data is telling us all. But again, something exciting to look forward. But again, if Bitcoin really shit the bed, it's going to take Ethereum with it. So that correlation is still there, and Hex going to keep doing his own thing. So, but long term,
there's
we'll get better.
there was a comment earlier. People are always going to get wrecked, and I would say that's the history. But in the future, I hope, right, that history can be changed and that history can be made with Hex, because Hex is really designed to stop people from getting wrecked, to stop people from trading. And even if it quote unquote is in people's nature to get wrecked and to follow hype and stuff, right? We live in a world where I hope people can get better. And I know that the reason why people act impulsively and why people take risky bets is because they're in the type of financial and economic environment where taking risks is rewarded.
Yes.
by the people who are at the top, who are just collecting, all of the people getting wrecked, collecting all the fees, collecting all the premiums, collecting all the liquidations and everything. And so when you change, it's the cliche, change the money, change the world, right?
Facts.
And when you can change the financial environment of people with technology, which is a driving force that's deflationary, that should make everything cheaper, right? And so when you don't have a few psychopaths at the top, billionaires who are sucking all of the abundance out of the world, and they're printing money to try to keep up with that. And that's how the whole US dollar hyperinflation situation hasn't played out against everybody yet too much. The prices have doubled every 15 years, but they haven't spun out of control because technology is hiding the effects of excessive money printing. And so, and it's really another theft that's occurring on top of theft on top of theft. And so I really think in the future, crypto, once it gets over this period of scamming everybody with Bitcoin and Ethereum with these high fees. I mean, the reason why Ethereum hasn't implemented all of the great ideas that already exist is because they're waiting for somebody else to do it first, and then they're going to use that to their advantage, I think. But they don't want to rebuild the airplane mid-flight. And so they're going to let other people crash and burn. They're going to keep taking advantage of high fees because they can, right? Because they think they have it all set, and they think that they control the exchanges, right? All these crypto superpowers, they don't have to compete really, except maybe with each other and playing whale games. But the whales are happy not taking from each other and just taking from all the new people. That's what the network effect is, making them fat and lazy, and they're just totally going to get disrupted. That's what technology disrupts: things that are stagnant, things that aren't evolving. And so that's what you're going to see is there's going to be more and more disconnect between reality and the way things are going in crypto, and people are going to have to choose sides. And so the people who are always going to get wrecked, they're going to have a choice to make, and they're going to get to choose to exit the fiat system, exit the corrupt crypto system, and go into a crypto that's actually decentralized, right? Like that's the definition of crypto and decentralized finance. And yet it doesn't live up to the narrative until you get to Hex.
Absolutely. And again, that's the key. It's one of the oldest wisdom too, because a lot of those things that those people have been doing, this is not the first time doing it. They keep doing over and over. But again, like I always say, Hexicans, what's easy to do is also easy not to do, because some of the stuff we're talking about that we're seeing is very simple. But because it is simple to do, it's also simple not to do. That's why you have to learn how to protect yourself from yourself, like I talk about, because all those urges, those pulses, it's called market cycle for a reason, because emotion can be very strong. And if you don't have that personal discipline, it's literally very, very hard for you to defend yourself. And sometimes being wise is better than being smart. Even if you have, strong hands, this and that, you put system in place that in case your strong hands doesn't hold, you have another system to fall back on that's going to protect yourself from yourself. Because those manipulation that they do, I hate that word, because again, once they do it, when the price goes up, nobody complains. Whatever that they do is nothing new. So because we're learning and teaching people how to play the chess game, not the checker games, you already know what the end game is. That's what we always say. Every road leads back to Hex. Because once you understand that money always follow yields, that all this dance back and forth, this and that will always come back to the yield. Because when the bear market hit, which it did, now everybody looking for what's the best rate, this and that. And those people like BlockFi and the likes, their interest rate is going to start to tank even more. Because as more and more people get wrecked and liquidated, who's going to borrow the USD? And all this other stuff to do the leverage trading? Because after those big crash, even the gambler is going to think twice about borrowing money for at least a little bit. He's going to come back, but he's going to at least stay away for a little bit. And that's what Hex means.
Awesome.
So that's very, very important. We have the highest yield. We're in the best market right now because when it's flat, those who get paid daily yield are the ones that are going to win. So once you understand that and you prepare yourself, spread the word, think long term, don't be distracted, go back to work. I know those are the unpopular things, right? But this is what makes true successful people successful. That's where people become millionaires. It's not just because they got the overnight success. You actually don't want to wish the overnight success because you will also overnight lose the money because you haven't got the thought process. Like there is becoming a millionaire and being a millionaire. It's not the same thing. You can be a millionaire overnight, but you cannot become a millionaire overnight because you have to have that millionaire mindset, learning how to delay instant gratification. That's why having so many people in the Hex community that made money prior to crypto is a big deal. And those are the ones that you typically have the strongest hands. And this is, following Richard's footsteps too. So we understand long term where the value of what's going on, and we understand macroeconomics too. So we can try to teach and help people how to protect themselves from themselves. And once they do it for a little bit, then they realize the value, and then they can do it for themselves. And then we can spread the world, and that's how we get that financial freedom spread around. The higher the price go, the higher the little guy can become a big guy, the more financial freedom spread around the world, and the more lives we're actually changing. And everything Maddie just said earlier becomes so true because we are changing the world. It sounds crazy, but we know we can and we know we will because we're out there taking the action. One of those wishful people that just talk a good game, hey, I have an idea. No, it's about doing, right? 10x, action taking. Not just talking, not just being busy, being productive. The doing is the key. Because if you don't take actions, you're not really learning anything because you're not applying anything. So, and I think this bear market is going to wake up a lot of people, and people will start to watch out where they get their content from too. You know what I mean? It's okay to listen to people's perspective, but you got to be very careful where you take your advice from. So,
that's right. Yeah.
Amen.
Do your homework. This is not financial, medical
This
advice.
is math advice. Coin game is all about the math.
Mathematical advice.
The only
Stop playing
advice
yourself.
Commands.
No feelings here. We're going to tell you the math advice. So, in recap, for those who just probably joined the stream, right? So, rule number 1, Crypto Quant is telling you there's a lot of pain coming. I hate to say it, but that's what it's talking to us right now. We got negative 12.5% on the Bitcoin premium, and we got a negative 8% on the Ethereum premium, which means people are buying Bitcoin as we speak. This is the facts at 33 to 34,000, which is where that long-term support that we created in January is, which is where now we hope that holds. Because if that doesn't hold, and if I go back to the chart, Maddie, I just want to show this briefly for people to see. I'm going to share my screen again really quick.
So this also means that if you're not buying a paper Bitcoin, then you're paying a premium, right?
Yes. Because the thing, yeah, exactly, right? It's so funny how you say it like that. But remember, those people are just there for the money. They don't care about, paper or not. It's like how they manipulated the gold market way back when. But it's funny, but you're absolutely true. Because back in the day, they were like, oh, but they're buying the actual underlying asset. When the premium was positive, everybody's like, yeah, go Grayscale. Right now it's negative. They're like, oh shit, Grayscale's back. So when you go back to this, share my screen again, please. I want to show people on the bigger view. So are they seeing my screen, Maddie?
Yes.
All right, perfect. So the problem is this long-term support here, we're buying at 33. If this thing doesn't hold, then it creates kind of like a big kind of like head and shoulder, right? Shoulder, big head like this. And then we might be creating another shoulder like this. And then death. And this is where you will get your, if we're lucky, long-term trend, you get your $27,000 Bitcoin. Or, as crazy as it sounds, next support is right around, 22K. So this is the two scenario. Either we bounce, and then this is going to be the moment of truth. We have to retake the 45K level, which is right around here for the long-term support. And then maybe the run can continue. And then we can pretend, keyword pretend, not getting my hopes up. We can pretend that we might be doing something like this here. But I'm not getting my hopes up because it's just too big and it's so out of the parabola. So what I think is most likely happening right now, backed by Crypto Quant, is there might be a little slow death here, another lower high somewhere here. Then it's gonna complete here, and this is gonna be the moment of truth. Either it dies or it just keep dancing like this crocodile, following that long-term trend here, because he might do something kind of like here. We're here right now. The question is, are we gonna bounce like this and like that and like this and slow death, or are we gonna just do head and shoulder death? So this is what next week is gonna be and end of the month. So we'll see what the drama is. But we're clearly bearish because we're crossing the DMI here. So that's the thing people need to watch out for. So keep an eye on that. Keep an eye on obviously buying low at this price to create a stake, because that's going to help you, especially if you're something like Hex. Because all of that time, let's say the price goes sideways all the way to, what is it? This is July, all the way to August, September. Literally, we can stay on this channel all the way to September. Well, you can earn yield for 3 months. For those of you traders out there that want to do short-term stuff, you have an easy 3 months here. Or if you're smart, you stay for longer than that, because we're clearly going to be on the Pulse network by that time is done. So you want to make sure you prepare yourself from that, which is what's going to be the key. Because on the other hand, now switching to Hex briefly here, which I think is amazing on the chart, right? So not only we have that, awesome bull flag that we are breaking out of, which is great, but what I like is the DMI, which I always told you guys. It got to the reset zone. It just crossed. Red's cooling off. Worst case scenario, maybe I give you another day or two, but it's already crossing, which means get ready, because we're about to go to the next run. The same way if I were to look at this one here, because I have for the Fibonacci's, we're above this one here. Those are called Fibonacci extension. So we're already extending, and then we're about to go to the next one. So, because if I were to
question for the chat, you guys, does anybody remember what Richard said the key levels were to see the bounce up in Bitcoin and Ethereum? He said it like a day or two ago. He predicted what the bounce top would be.
The bounce, no, he had it around 31K, which we did. Let me go back.
31?
Yeah, which we did. We already bounced there. But the problem is the bounce was too fast. It only lasted a couple hours. That was this one here. See? So this was the massive sell-off. There is some buy, but see, the volume is not that big, Maddie. This could just be a huge rising wedge. That's what people need to understand. Because what could be happening is, this is short time for this 2 hours, which is almost nothing. It looks like it wants to go. And it might. But at any time, it can also reverse and die. That's why I don't like short time frame. Right? I do daily or weekly. So, because right now, this could be a fake out. Because when you zoom out on the 4 hours, blue hasn't crossed yet. So it could be another fake out, and then we're clear on the bearish trend. Same thing on the daily. It's literally not even close. So it could rip up again. But we can get a temporary relief rally somewhere around here, and then death. The problem is this was a massive sell-off and a buy, but there's not a lot of volume here. So it could go, because there's a lot more limit orders here in this box, because this is where the golden pocket is. This was so fast, it's hard to register. You see, the chart is not even seeing it. I have to go on maybe on the 1 hour chart. Hold on. Okay, it's showing 32. Okay. Literally, let me see if I have a 1 hour chart. Because it barely was there, but it did crash there and then bounced up. Yeah, well, all the chart will show. This one doesn't show, but this one shows as low as here, 32.4. But on other chart, I know for a fact it went below. It went to like 30,800 in some exchange. So the point of the matter is, you can have a relief rally either here or somewhere here. But remember, all this is fake. If you don't retake the 45K, 46K support, you're wasting your time, because this could be seen as a inverse head and shoulder, but the target will be here, and then most likely people are going to take profit. So the question is he going to get there? Because it's getting close, but it can be another fake out, and then people come in, they go long, like Wells talk about all the time, and then they get liquidated again, because there's no more support besides this zone here. So that's why people got to be careful. Now, if you are smart and you're buying for staking, this is great, because you're getting anything less than 45K, that's a discount. You're getting a nice 10% to 15% discount. You buy your Bitcoin or your Ethereum so you can switch it to Hex. So, which is great. See, same thing on ETH here. See, you got your nice little dip. It's better than buying it at, 43,000. But you see, this is the difference with Ethereum, right? The long-term trend looks still great. It's literally back to where we were just like a month ago or so. So Ethereum is looking more bullish than Bitcoin. You can retake that and continue to go. So even if you zoom out on the daily, it doesn't look so bad. You see, the long-term trend is still here. That's important. Now, here's a crazy thing. Ethereum could be doing its own White Cliff distribution pattern right now, which will be crazy bearish. But I'm not believing that until I see what EIP 155 is going to do. And what I mean by that is if it is doing what Bitcoin has done, it's just a lag. In other words, it's basically doing this. Ethereum could be doing here, this zone here that Bitcoin had before breaking out of the trend. And it's just weeks ahead. So it could be here, did the little dip, and then trying to do the last rally before falling off the cliff. Because if you were to do a trend line here, kind of like, let me do 4 hour. This could be the last trend line that's going from here to right around here. And then if it fails, then it's cliff. Same way we go back here. If this fails to take this high, and again, we're right around June. So you're going to see the buy the rumor EIP news right around first week of June. If we fail to take the new high and then we go back, the moment this long-term trend is broken, guys, this is going to be cliff. It's going to do basically this, literally. It will be, we're here and we're trying to do the bounce. And if it fails, rising wedge, death. So I hope it does not happen. But again, it's going to be all about the popularity of the EIP. But right now, it's looking good. Long-term trend is still here. You got a nice little candle here, nice fat candle right here. This is the institution switching to Ethereum also. It's green. So we could be good. We could be good. But it's a wait and see. This is where first week of June is really going to be the storyteller. But again, back to Hex, which I love, is we're looking amazing. DMI is looking great. I like this one because it has a longer trend. We're crossing, going back up because it's up and to the right. Stochastic, which I don't really care about, but it's being oversold for a while. It started to perk up, which is a good sign. End of the month. See, diminishing volume, ready to go. We actually break out of the thing already. I literally draw the pole for the bull flag. Target right now is, you're looking at, right around 10.5, almost 11 cents. Looking juicy, looking great. Fibonacci extensions are looking great. And if you go back on the Hex ETH chart, which I only show this to show the fractal, which is important, we're sitting beautifully inside that fractal. We passed the first level, corrections done. Now we're on the second level, which the only reason why we didn't touch that is because, we're dealing with a bear market right now, but it's literally getting ready to go. We already crossed, indicator looking great, alligator looking great. I mean, it's just bullish as you can. So we have a lot of legs to go. And this one is cool because when you look at it on the weekly, you get to see where we have a lot of way to run. And like I told people, this W here, which is this guy, get to here and then see you later. It's the same thing we're doing here. W pattern 1 and 2. We're going to go here, hang around here a little bit, right around September, and then we're going to launch, which is going to be right around pulse time. So, and then when you look at the Fibonacci extension on that one, it gets nasty. Look at this. This is awesome. It means that we can go all the way here. 130,000 Gwei. Insane. That's a 10x almost from where we are. And that's in Hex ETH, which is a move as a function of a square. So 10x almost means 100x, which is how, if Ethereum doesn't crash, that's the key. This is how you get your easy $1 to $2 hex, because it's literally, we are walking to greatness right now. It's literally there's a stair to heaven.
So there's 240 people watching now. There was 4,400 people who watched last week's episode. 20 more subscribers, and we'll hit everybody? 2K on this channel, 2,000 subs. So 20 more people, go ahead and subscribe. And while we're on the topic, go ahead and go to youtube.com/WhalesOnly. And we need 50 more to get over 1K on that channel. And then see if we can beat this week the likes. Last week was an all-time high, 435 likes. So whatever it's at now, smash the like button and see if we can get higher this week.
And another thing that's very important, going back to your pattern that Wales and I talked about at length, this is also a wake off, but instead of distribution, which is done at the top, accumulation pattern for a month, literally. And the only reason why I left that Fibonacci from way back when, because the red zone is, you don't get any more discount than that, which is awesome. It was just, this is when people got their marshmallow too soon and gave away their hex so cheap. It was stupid, literally. And now, the only reason I care about this chart here, because it's the most bullish one, because it shows you that we have so much more run to go. And even if Ethereum crash or goes down lower, we're going to probably explode out of here even faster. And as hex are being more and more scarce, liquidity getting smaller and smaller, it's going to cost more and more and more, which is why the price is going to start to accelerate faster and faster, because money is moving into the stronger hands. Stronger hands are not selling. They're in the long term. They enjoy their daily payout, which allow the price discovery to really, really continue to take off. And the reason why this Fibonacci is great is because typically when you pass this green level here, which is back to the 50 zone, this is really signaling like a strong bull market. Again, this is hex ETH because we're just continuing to catch. So if Ethereum go to 3,500 because EIP is doing us a favor, we're going to get to literally 10 cents even faster. But regardless, this is the chart to look at for the long run, and why all the way towards September, this is about to be great because that trend is strong. Everything's amazing. Alligator pointing up. Keltner channel is literally out and about, and know where the target is where the extension of the Fibonacci is. We're doing the same thing that was here, and then it literally exploded. We're doing the W. We're going to get here, hang around, and then we're going to explode again. So stay tuned for that because it's going to be amazing. So
yeah,
everybody new, welcome to Hex. You know what I mean? Staking rewards is about to become also more valuable, which means T-share is about to be even more valuable. This is literally just blue sky breakout because downtrend here, broken, down one here, broken, long-term support looking good. I mean, we're just looking amazing. So keep an eye on that for the long term, but get ready because when the train leaves the station, which is already kind of starting already, it's just going to just accelerate even faster and faster because there's less liquidity available. So, and over here, we're already getting out and we're just playing out the bull flag. We're in that new zone, that new extension. So the alligator is pointing upward again. So everything looks good. So again, to me, it's just fun to watch because again, I don't trade. I just keep buying. So the other last week when we had that nice little dip area, I just scooped up some more, staked for 15 years, almost $30,000 plus worth. It was just great to have. So yeah.
How much liquid hex do we think traders still have?
Oh, not much.
Wiped out.
Not much because a lot of them got, again, this is the thing. I don't care how good of a trader they think they are. When the panic happens, they're always going to dump. They're always going to want to exit. And the worst part is if they exit to another shitcoin or even Ethereum, thinking Ethereum is going to last and Ethereum goes down, they lose even more value like that. Because number one, they get wrecked by the slippage no matter what. Number two, some of them emergency end stake. So they got wrecked there too. And some of them who may have been smart went to USDC, but then again, now Hex is back to 5 cents. They thought, Maddie, right? They were smart. Oh, let me sell it right now, 3 cents, 3.5 cents, because maybe I heard some crazy, obviously nonsense that it's gonna go to 1.82 cents or whatever. Not understanding that the Hex ETH pair already broke out. That is just a shift in the market. So no matter what, they got left behind. where the smartest thing was to stay in the market because number one, you don't get hit by crazy slippage. Number two, you don't have to emergency instead give away your money and your interest and get paid fine. And number three, even if you went to Tether, then you actually lost because now the price is about 5 cents, which a lot of them sold way back below. Somebody, when they go to buy back in, because now we have 5 cents, they're going to be able to buy back less hex than what they had before. Because the goal was to get more hex. And they don't understand that the system already does that for you.
I used to play a game where it was like, if the price of hex went down too much, then I would stake it instead of selling it. Just because what am I going to do with it? Like,
that's the misconception that
way
they
to
don't
think
understand.
about
It sounds good until you understand how T-share works. Because while you're playing that game, T-share rate is not waiting for you. While you're playing that game, number two, that share rate that you could have, you're not getting anymore. While you're playing that game, number three, the 3x factor multiplier that you could have had, you're not having that. Every day that goes by, my T-share value is strengthening. It's separating.
So, but we're talking to the traders right now, right?
Yeah.
That's the audience, not the audience that we've educated. We're
absolutely.
talking to people who aren't there yet. And
if the traders are watching, they need to understand
yeah.
it's not the USD chart they need to pay attention to. They need to pay attention to the Hex ETH chart, which is the one that I show, because that one still has a lot of run to go. And they need to understand USD right now is going to be all over the place because, again, the market basically had that little, action that he had, little crash, mini bear market, even though Hex hold it very, very strong. We didn't do negative 65% like some other stuff, you know what I mean? Oh, hey, it's Quant Gang, man. We're speaking the facts. The facts are what brings the FOMO. But traders, look at that and understand. Because none of those other places pays you interest. Understand that. Bear market, if we're lucky, maybe it's going to do like the cycle of bull run number 2, which means go sideways for two months, if we're lucky, 2-3 months, and then goes back up, if we're lucky. If we're not, and that 30K is broken down, forget about it. It's going to be a full market cycle. And at that point, as a trader, you want to think about potential staking strategy, even for a few months.
Let's hear from Whales and then talk about this pulse sacrifice.
Yeah, man, you just really want to be careful because the market can look like it's recovering and then just sideswipe you.
Yeah.
Right. So just watch the price levels, be cognizant of what you're doing. And don't let the hex dips escape you because they're very quick.
Facts. Limit orders are nasty.
Yep. Richard has discussed the idea that if people have liquid hex, that maybe he would suggest to them, although he's not, and it's not financial advice, right? And it's not that he knows what's going to happen, but he's thrown out the ratio: 2/3 of liquid hex being sacrificed for pulse, 1/3 being kept in liquid hex so that it appears as liquid p hex on the other side of the Ethereum fork with pulse chain. So absolutely. What do you guys think of that ratio?
Kind of like 50-50 personally.
You like 50-50?
Yeah, I mean, why not? It was just cut it in half. I don't know. It depends. Yeah. It depends what the ratio is for the sacrifice, I guess.
I look at it like that because everything Richard says, I know that I overthink it, but I know there's always a deeper meaning, and I run all the numbers to make sure because my brain just does that. I think what I like about his ratio for 1 to 3 is that he understands the value of being new into the new chain as well for those who, which would be wells and all that kind of stuff for their trading. But he also understands the value of people need to remember hex will never be cheap. I repeat, X will never be cheap. That is not the point. Again, the store of value means that it will work on both sides. So what kind of works out with that math and is conservative, and it doesn't sound like, hey, I'm not supporting the new change, but also, hey, let's not forget what the main thing is. Hex is the main thing. We mainly do pulse to solve the fee issue, political stance, sort of stuff, but the main thing is still the main thing. And what goes well with that math is because, remember, you're getting 2x. So what ends up happening is you buy hex right now, everything you prepare for the sacrificing. that 1/3 that you're actually going to keep liquid is actually not 1/3. It's actually double, because that liquid, let's say you pretend you don't even stake, even though you should.
Yeah, good point. Good
Let's say
point.
you don't even stake. See, quick maths. The 1/3 is actually 2/3, because you're getting double. So to actually Wells' point, funny
So
enough,
it is 50-50.
mathematically, Richard is
Yeah.
doing a 50-50. Just the
Yeah.
average person doesn't get it, because the 2/3 for the pulse is just going to be for the pulse. You're going to get that swap. The 1/3, you're getting double. So you're going to get your 1/3 on the Ethereum. You're going to get your other 1/3 on the pulse chain. So you got basically 2/3 hex and you got 2/3 pulse, because that 2/3 is going to get converted. So it's actually how you do the true 50-50. So that's why it's pretty smart. Now, me, because I'm more long term, so I'm like, well, why don't you want to double your stakes too? So if you want to keep 1/3, which is a smart idea, don't get me wrong, Karim, take it a step further, make that 1/3 a long stake. I don't care even if it's okay, maybe even 3 months if you're a trader, whatever, or however long you think the bear market's gonna last. Ha ha ha, right? If you make it a stake, that 1/3 stake gets doubled. So the stake is earning every day until the sacrifice actually ends. So every earnings that you're getting every day is also gonna be doubled before the snapshot. Because remember, snapshot will be 30 days after. So again, every day is an opportunity cost. We're in a bear market. Every day I get paid 8 p.m. More hex. Every day that the snapshot hex clip, listen to this. Every day that the snapshot does not happen, my hex count goes up. My hex count, which will double, increase at an accelerated pace. So I am buying the dip while I'm staked. All the emergency penalty that came in is gonna get double too. It's stupid. It's the mad gains that Richard promised. It's there. You don't even need, like, you're lucky I'm breaking down the math so you understand, but the system handles all of that. And you had no drama. You didn't have to worry about, you could just turn off crypto, Twitter, influencer, this. Oh my God, get off a cliff. No. You waited 3 days. You logged back in. your gains went up. That's it. You can't make this shit up. So understand that. Those are all the mechanics. So the 2/3, 1/3 is a great strategy because it's actually a true 50-50. Because your 2/3 will turn into pulse. The 1/3 will double. So you'll get basically another 2/3. And Cream takes it another step further. If you're smart, you want to at least stay, maybe short term. I don't care. Long term behavior, that's cool. Because every day that will go by before the snapshot is going to be more hex that you're going to gain. Every emergency penalty that happens there too is free hex that you're going to get. So let's say you were to do a 3 months or a 6 month stake, all that accumulation plus penalty plus whatever, you're going to accrue all of that. Most of it is going to get doubled. And then by the time your stake ends, before the end of 2021, if you're a short-term thinker, that's cool. You're going to be able to earn more gains, free money. Maybe you fell in love and you do a long-term stake because you realize how cool the T-shares are.
Maybe.
The bottom line is everything started by buying hex. Without hex, you can't do anything. Because the narrative for the sacrifice hasn't really played out yet. People don't understand. Because we haven't fully announced when it starts. When that thing starts, it's crazy. Timer goes off. So don't wait last minute. Wells told you dips don't last here. It's too much pumpermentos. It's too good. System is too good. I can't buy anything else. My brain won't let me. It's literally for me, because I'm all about the math. It's financially irresponsible for me to buy anything else. I say it again. For me, it's financially irresponsible to buy anything else because it's just that good. That's why, even ratio-wise, I'm holding more hex because nothing else beats it. It's just that good. We're going to be number one. It's a fact. Nothing beats us.
Yep. Time will relay that very shortly.
Somebody, I hope that answers the question in the chat that they asked.
Yeah, and I think the other factor at play here is that I don't think that the sacrifice phase will start until everything's set up, ready to go.
Mm-hmm.
Which is perfect.
Otherwise, look at what would happen if the sacrifice phase started, then ended, and then there was a gap between that and the launch of Pulse Chain that would not help the price and kind of be like who wants to buy ETH hex after the sacrifice phase before Pulse Chain is launched. I mean, not as many people as want to buy it before. So that's why I think that this will.
And again, friendly reminder to everybody, because the Hexicans obviously get it, but just in case, as a friendly repetition, it actually is an opportunity in disguise. Wells talked about it too, because a lot of people are still buying, myself included. I buy every paycheck, and then it's like, oh wow, we got more accumulation that can come in, because now I can buy Ethereum for cheaper, which then gives me more hex. So all of that comes in, because remember, share rate doesn't wait for you. And more importantly, as more people buy and buy, the scarcity of hex increases as well, as more people discover hex. So if you're one of those who are like, oh my God, I couldn't buy it at 6 cents or whatever, or I was gonna get less hex. Well, guess what? You have an opportunity to buy it for way lower right now because of this little market turmoil, whatever you want to call it. So that's an opportunity for you to load up before, because you already know what's about to happen, because you're watching the Quant game, you're paying attention, and obviously, in the special Telegram, they're just making sure that everything works out perfectly, so we can have another perfect launch, and that's great. So take it as an opportunity if you know where you believe to be in terms of your bags, where you're trying to bag, and obviously you have work constraints where you can only get so much money in a certain period of time, and we got Vegas coming up next month too, which is going to be insane. That's going to create so much FOMO because it's just so great. I'm going to be out there recruiting people left and right, best belief, because it's just I still average 5 to 10 people, new heads every week, nothing changed. So understand that, because the liquidity is draining very, very fast. And as much as some of those big wallets exiting, it's a good thing, because those coins just get redistributed and the dips get botted out. And then next thing you know, no more dips. Lift off.
Just as described over and over again. So, just get it while it's hot. Get it while it's hot.
I love it. And I guess just to prove a point, Maddie, we can maybe transition to some of the chart to let Wells show people how good we've been getting it, because I think was it 2 days ago? 2 days ago we had an all-time high in APY. It was crazy, almost like 40.
Yeah.
That was amazing. We had like a 6 something. It was amazing.
Yeah. So I was just looking at Bitcoin and how it's been cascading.
Wells, what's the box down below? I want to know what's the price. Tell me the price.
So this box is right. I was just looking at these charts, and I just realized this is basically just the range, right, of the first distribution. So I just replicated it time and time again.
Smart.
Just to see, right? We already have one of that same range.
Yep.
And here the third one would take us. We could ignore this one. We probably won't see that.
Yeah.
But this third one would take us to 22.5 or so.
Mm-hmm. I like it because it keep hitting the long-term supports where the box is very symmetrical.
Right. So we'll see. They're still printing a lot of fiat, in stable coin terms.
Yep.
When that happens, that usually means we're going to see more dumping.
Not
a reversal of price. That's just exactly. I mean, I explain this all the time. This is exactly what they do in the legacy side of the market. This is how they manipulate things.
Mm-hmm.
They create a lot of dollars. The dollar value goes down. All of that is related.
Rinse and repeat, baby.
So then you get these crazy down moves, right, in the dollar.
Yep.
And then look at that. This shouldn't be happening at the same time.
Exactly. It's supposed to be correlated. Yep. Exactly.
They should be decorrelated. The Bitcoin should be going up while the dollar is going down. So that's how there's some funny stuff going on.
Yep.
And we've talked about this before, but it's just to refresh the memory and make sure everybody's always on the same page when it comes to.
And you can see when the correlation started to go to 1, do the same thing that was near the top. Literally.
Yep.
Because it's like, hey, nah, we're gonna manipulate this thing. Because that's what I was telling people. It's not so much of a bear market, but it's more Bitcoin bear market because people are getting murdered in the legacy, and that's why you have to have that macro view. That's why some of those influencers are so frustrated because they're like, this is not supposed to happen. Because you know what they're upset? This is the funny joke because they wanted to fucking dump first. That's why they're upset, but they don't understand that there's a lot of other power at B is at play because they're getting liquidated on the legacy. So they're like, hey, our Bitcoin just did a 10 to 20x. Let's go cash out of that because we're getting margin call on the other side, right? So they literally siphon the money like that. And then they'll use the Bitcoin premium, sad to say, to do their manipulation because they are the one buying from the market. So they can literally dictate like a pawn shop what they're willing to pay for stuff.
Yeah. The influencers are mad because they're drinking their own Kool-Aid.
Exactly.
And deleting tweets.
Yeah. Oh, fuck yeah, dude. Yeah, absolutely. Look at that. Yeah, you can't.
Not a single Hexagon is deleting a tweet. Just saying.
We're keeping it real. But you see, it's so funny, right? The dollar now becomes oversold, and if that thing bounce higher, it can murder Bitcoin.
It's only going to make it worse.
Yep. Because if it's going down and Bitcoin's going down, when it start to punch back up, oh boy, it's gonna be savage. Is this the weekly or is this the?
This is a 3-day. This is a 3-day bar, 3-day candle, 3-day candle. Nice. Just to give it a different type of view.
No, absolutely. Because I want to look on the weekly to see if they're gonna start pulling the trigger for the rates like next month or maybe one more month. Because right now,
for the rates, hold on.
Yeah. Because it started to eat oversold or maybe not completely yet. So, yeah, so it broke out.
This is a 30-year, right?
There you go.
It's already rolling over.
Mm-hmm. Because they have to do the control structure. They can't let it go too high. But the simple fact that it's not kind of crashing, it's just kind of holding. See, you try to crash, but then it kind of holds. I tell people all the time, the simple fact that it holds this high is also bad because the market is so over-leveraged. Even a consistency staying like this is just a slow death. It has to go down. If it does not, it's just gonna keep murdering down.
So this chart is a spread of the 2-year U.S. interest rate and the Fed funds interest rate, which is just the overnight cash rate for the U.S. And what this is saying is that when the spread moves down, the Fed has to cut interest rates. And recently we've gotten a 5 basis point move, basically, which is a lot. 4 to 5 basis points is a lot for a spread of this type, which is so close in terms of duration.
Yep.
So that means that the Fed is, probably behind the ball, and if this keeps rolling over, it could spell trouble.
Motherfuckers were like, okay, too much frothiness in the market. Return some of that money back. That's what.
I mean, this is the 2-year yield, right? We're at 12 basis points, right? Which is like nothing.
Yeah.
Right? This is crazy. Let's give this a 2-week look.
But what's scary is that it's kind of oversold, and it seems like it wants to go touch the yellow line.
It seems like it's gonna roll over some more.
Yeah. So
seems like it's bear flagging. Crazy enough.
Let's hope.
Well, it's gonna be ugly.
Yeah, exactly. Because every time it does that, just look at back in 2012, it can just stay there and then decide to just run to the yellow line. And that's why if that happens, listen, I watched the news too. Oh, a record low COVID cases. I told you, Hexagon, good news is bad news. That means, we're not gonna print no more. You're getting vaccinated. When I was flying back from Miami, like now people walking around, I mean, besides on the flight, but like it's really cool. If you're vaccinated, you don't even require to have a mask or whatever, even though I'm not, but they're playing this whole like leap of faith stuff. But you started to see they're trying to return to normalcy, which means the shoe's about to drop. So
sure is.
And nobody can complain. You got all your free money, all this other stuff. You don't want to go back to work because you got all this free money. But they're gonna make you go back to work. They're gonna get you wrecked first. So you're gonna stop thinking that you're a trader genius, and then you're gonna go back to work. You're gonna see those McDonald's moves again.
These for you, baby.
Yeah,
and no raises either.
No raises.
You know what's crazy? They were paying people $35 or $50 just to come for an interview. That's how bad it
What?
got. Yeah, because nobody think about it. You're getting all this free money.
That's
Unemployment
funny,
is
bro.
higher than the money you
Wow.
even collect before,
That's
especially if you have
hilarious.
kids. And then you got all your steamy money. You think you're a trader genius because the market was just great until 3 days ago, of course.
Right.
But it's just. But remember,
Funny how that happens.
they give you the handout once. You lose the money, that's on you. You can't come back and say I want more. They'll be like, yeah, no, we already printed. It's done. So
Yeah. Look at this 10-year yield, 1.57%.
mhm.
1.57.
The fact that it
Can
stays
people
at
ask
1%.
for more?
Yeah,
No.
right. Nah, Maddie.
Uh,
Until September, no. And by the way, breaking news, if you guys don't know, the courts are reopened. Evicting notice are started to get rampant again.
Ah.
Scary statistics. 60% of American households did not pay their rent. Delinquencies, all this other stuff. Before you were sheltered by all the thing in the wintertime and protection, all those things are wearing off. End of this
no.
month, end of June, courtrooms are reopening. It's about to be nasty.
So that's how they're going to get everybody back to work.
Oh yeah, they're gonna get you right.
To keep prices from flying higher, which is what a free market would do, right? It would cause inflation with all the money
all the
printing.
money printing,
The
yeah.
price of
Yeah,
things
with all
would
the
go
money
up.
printing,
People
yeah.
would demand a higher wage so that they don't have to eat the cost of double the monetary supply.
Mm-hmm. Or they let the whole thing crash, which will strengthen the dollar, and then you will feel grateful about that wage that you have.
And then export the inflation, right? To make other countries suffer.
Either way you win.
Or just keep it into Wall Street so it feels an illusion that it's not coming out, so you're not seeing it. Because it's about the velocity of the money that's really makes you feel the inflation or not, right? So if it stay locked up, it's not. But as people start to spend, which by the way, in a bear market or in a tough time, right, consumer wants to spend less, rightfully so, because they got to be more cautious. But by pushing you out there, they're gonna try to force you to spend. So, and let's not forget that IRS is also coming to get its cut of stuff, taxable event left and right, Maddie, left and right, and they're already hiring firms and so on and so forth to do all the chain analysis and whatever. That's why they love USDC so much too, because they're tracking everything. So that's what I tell people: be smart.
As somebody who pays my taxes, I still enjoy whenever I get a message from an exchange that I have taken all my money off of, and they're like, "Yeah, we're gonna KYC you now," and I'm like, "No, you're not."
See,
That's
Sorry.
funny.
so and this is something that's a little bit nasty that I want people to realize. And shout out to Well for posting this chart, which is very important. And I'm going to use a fractal here to repeat what I was saying earlier about how Ethereum could be also doing its distribution like Bitcoin, but it's actually about a month early. So first thing we're gonna do is a great chart. We're gonna go back. Oh, leave it like that. This is good. Go back. What you had before the frame. Was it a day or week? Yeah. Perfect. This is so good. Such a good chart. So first thing we're gonna do, Joel, we're gonna go back to 2017, 2018, the end. You guys saw the reason why those lines are important because those are like mini parabola and then kind of rising wedges to tell you kind of like a clock. When it starts to go the other way like this, that means that the parabola is losing steam. It's time to get out because it's going to go all the way back to a long-term trend, right? So, and you match that also with the RSI. So it broke the first one, then he got to that second one, the purple that Wells had, and when he broke that and he failed to retake that, that's the last point. Just like in Bitcoin, when he went below and he failed to retake that 48K to 50K, that was the end, and then death from there. And then RSI entered that zone below neutral and then went bearish and then never to be seen until literally over a year later, right? Now, you boom. You fast forward that to today, same play. We broke out of the first parabola triangle, the heavy yellow line. We broke out of that already, so it's done. That's the first step. Now we're working on the second step right now. EIP is going to come next month, right? Because again, Hexagon, we're here talking about the futures, but again, it rhymes for a reason. You see how the RSI already entered the neutral zone, which is bad because over the last literally 6 months, it never went into that zone. Never. Again, this is Quant Gang. There's no feelings here. There's the facts. You're looking at it in the chart. Shit is turning potentially bearish. Now, like any distribution, there is a time delay. So if the parabola can be regained or stay inside that second yellow line that Wells has, we are okay. But the moment it breaks out of that, and RSI fails to go back to overbought and stay where it is, which there's no reason why it will go back up, and the GBC premium already told you it's negative 8%, so people buying Ethereum at $2,300-$2,400 right now. If that create more selling pressure, we could be literally with a month delay playing the same fractal pattern of 2017, 2018. So you need to monitor that because MACD is about to go oversold, but the RSI especially, and this is weekly chart, which is why it's key because it's about big pictures, not the day-to-day drama, the Elon Musk, the this, the that. That shit is irrelevant. What we're saying here is if EIP turned out to just be another buy the rumor, sell the news and a non-event, get ready to see Ethereum at potentially below $2,000 again, possibly $1,400-$1,500. You need to be aware of that. This is why those long-term trends are actually are very, very good. I will personally even go a step further. Well, can you zoom in just in that chart? And can you trace a line? I want to show people my line that I'm seeing. Just zoom in into the chart. Yeah, more. And then if you were to do just a line from that pole where the first pole, not this one, next one. Yeah, right around here, a little bit. Yeah, sorry, you had it. Yeah. And then right around here, and then just do a diagonal just to kind of show where like that little uptrend. Oh, actually, instead of that candle, the second green candle, the one just before the top candle. No, go back. The first.
How do you want me to put the line, bro? I'm not getting you.
Oh, no, not the. Now you're doing the second. The first. Erase. You have to erase. That's what you do it. And then do it from the second green candle. Not this one. Next one. More. Yes, right here. And then kind of like that below. There you go. That's what I'm tracking. That goes back to the thing that I was sharing. That's what I'm looking for. Because that's the trend that we did over the last month. Because this was the last time we almost got back into the RSI, but we did not. We stay overbought, which is good. This is my trend. This is why I say Ethereum is still okay. Even that big dump, that trend is still there. If people go back to the video about an hour ago, that was the trend that I drew. That's the one that I'm looking for. And it might just stay here. I'm going to trace it longer, and I give it about a month. If it breaks that and go below, I'm not even going to wait for the next yellow line. I'm going to call this, okay, this is going the other way. And then it will become the end of the distribution pattern. Do you see what I see, right?
Yeah, bro. It's not obvious right here.
Exactly.
Because if it breaks this, it's just going to...
Exactly. Right now, we got lucky because it hit that support.
wall.
Yep. It hit that support. Now we're chilling, but now it's just depending. That's why next month's going to be critical. And of course...
It's actually ugly, right? Because it ran up like this and then it just got slammed back down, right?
Yep.
And then look at the momentum here. There was like none.
Yep. Because MACD tried to turn back bullish to do another one of the same thing that he did already 3 times over the last 6 months. But this time around, it's telling him nope. And if you go back to May of 2019, this was the moment when we went bearish too. And then once he went below MACD and then death all the way.
Yep.
The same way in 2018, early 2018, RSI got into the zone, and then MACD right around here when he crossed, and then after that, he never went overbought after that. No. And MACD went bearish. It's literally almost what Bitcoin has done, just like we predicted months ago, but just a month in advance. If we go back to Bitcoin, remember how we were telling people, look at the bearish divergence, right? Yep. And then boom, RSI got inside the middle zone, and then never went back overbought and just death. And now we clearly like bear market.
Yep. I mean, hey, we talked about it for a while, man.
Exactly. So people, listen up. What we're telling you is the same thing we told you 2 months ago about Bitcoin. Ethereum is doing the same pattern. You can't make this shit up. Back to what Bitcoin has done since 2017. Once he gets inside the RSI zone and he never goes back up, it's death. So if Wells goes back to the Ethereum chart, you see the same thing, but with a little bit of a delay. It's entering the zone right now, which is bad because over the last 3 months, RSI was never into that middle zone. It got close to it, but he always stayed bullish. All the way since the COVID dip. Look at it. You can't make this shit up. Since the COVID dip, RSI was never neutral. It was always overbought. Every time. Maintain it. All the way to this time when he entered the zone. And now MACD is turning bearish. Now people are thinking, oh, yeah, but what about next month and EIP and da-da-da-da-da? That's cool. Trust me. I want it too. That's why I'm telling you, draw that trend line like Wells just did. Very strong. Monitor that. The moment this shit is breaking, get out. Get out.
Yep, for real.
Because this could be exactly what Bitcoin has done. And this is exactly what Ethereum has done just a bull cycle, 2 bull cycles ago.
I hate Ethereum.
Yeah.
This is basically it right here, bro.
Yeah, right there. Oh, wow. Well, it's perfect. Yeah, exactly. Exactly.
It's basically it.
It's basically it. Yep.
You can move it wherever you want, right? Like that's basically it.
Yeah, no, it's basically, and I like it like that because I don't want people to return too much gains, right?
Yeah,
I don't want people to wait until Ethereum is below 2K to realize, oh, I should have sold when it was 2,800. So right now it's okay. Don't panic, but monitor that trend line.
Yeah, once it breaks that, jump.
Once it breaks down, it's a wrap. Let's go home.
What about it's financially irresponsible to hold things other than Hex? What
Oh yeah, I mean,
exactly.
This is definitely financially irresponsible.
Convert that Ethereum to Hex while it's still heavily valuable.
Well, while we're talking about that, look what we got here.
Yeah, we broke out. This is so good, man.
So this is interesting, right? Because this acts like a magnet on price. Actually, it's not as bad as it looks, because this is the actual reality, right? Yeah. This is an actual breakout. We broke that wedge, and we're just catching our breath here because we're going vertical for a nice period of time.
High and high low. MACD looks great. RSI looks great. Hex is just chilling.
Is this the whole history of Hex?
No, this is
probably
V2.
Not.
No, this is V2. Because
V2.
this web trading view only has V2. That's why I had to pull up.
Yeah, this is just V2.
Yeah. Because it's V2.
This
there
is
you go.
V1.
Look at beautiful.
So let's talk about this for a little bit, right? Because I posted this in a tweet earlier today because I had to wake people up early this morning.
My favorite chart.
Let's not forget that this is what's going on.
Yep.
Like
Maddie,
maybe this needs to go on a t-shirt. Maddie, what do you think?
Up and to the right, baby.
You know what I mean? Literally up and to the right.
Beautiful chart in crypto.
You know what I'm saying?
Everything looks amazing.
I mean, this thing has dudes breaking necks. Right? We've been talking about this for months and not just seeing it. So congrats to them. You know what I'm saying? Congrats to them. It's about time. And it's just gonna be the party, man. We're on our way up and out, up and at them. So, just enjoy the ride.
You got it, Marco. You got it. Yeah, everyone's child. It's awesome.
Because this is just what it's gonna be. And I mean, let's look at the V2 version, right? I mean, we already have broken out of this little wedge here, right? We already have it here. And it's right there already laid out for us. How nice, right? Price has already broken out.
Yep.
Moving averages are turning up, right? And I talk about this all the time. When the moving average on the long end of the scale bends, that's bullish or bearish, right? With respect to the direction in which it bends. So here we have all these bad boys bending. So this is bullish, right? This is a nice little breakout that we have here. We're just going to get another one of these moves. Just another one, right? And we're just going to keep marking time and getting paid, man. And this is just what Hex is designed to do. This is why it's supreme. This is why it's doing that, right? This is why we don't really even care about this. This doesn't even matter. This is just cool to talk about.
Yep.
Right? This is just for bragging rights. This really doesn't matter.
Yep. And it helps justify the insane numbers when people are talking. Say, oh, it's not going to get there. We show them that this has so much room.
It already
to go.
has.
It can make sense of what seems like it doesn't make sense. When we tell people it can go to $1, they're like, wait, how? Well, they don't understand that, dude. Because the ratio on the Hex E for Hex BTC has so much more room to grow.
Correct.
I would like to interrupt this broadcast to say that there are at least 37 people out there that have not hit the like button. Get out. You don't deserve this. You
Hit
should
the
be
likes,
ashamed
fellas.
of yourself. You should hit the like button or get out. When I tell people to get out, the view count goes up. So
Boom.
do what I got to do, you know?
Well,
Whatever works, baby.
and this is a good chart because it gives me hopes also for Ethereum potentially doing, 3K or 3,500 next month, because the ETH Bitcoin has obviously a little pullback, but still an uptrend. RSI still looking good. He still has another 5% that he can run, and maybe flip it. Who knows? But
Got some
again,
nice resistance right here at
yeah.
8.
But we can't ignore Bitcoin dominance rising every time Bitcoin crash, because that's the safety mechanisms people will run towards. So we just need it to be kind of stable, but we have to pay attention because sadly Ethereum follows what Bitcoin does.
Right.
But right now, if you can find some stability, at least for next month, so we can run that narrative, we're going to push up. But Ethereum might got one more run because of EIP, and that might be the top after that. So
yeah, could be this
stay
level
warm,
here
stay
on the
sharp.
screen.
Remember that trend line we just showed you. Monitor that like a hawk. We want Ethereum to go to 5K. Yeah, that's cool. But if it doesn't happen and break out of the trend,
Be ready.
you know what time it is.
Resistance
Actually,
showing here too.
maybe if you extend that yellow line, maybe we can see where the potential rejection top is. Right? Think about it.
Extend this yellow line. Which
No,
one?
the other one, the top one.
This one?
No, the one to the left. The one that's
Sorry.
Extend that real quick. Maybe we'll get to see. There you go. Because that hexagon, this is what could be a potential dead cat, right? It will go up to kiss that. And then if it doesn't cross, then decide to go the other way. That's also a potential signal.
Yep. I mean, it's simple things like this that really give you this is all TA is, right?
Mm-hmm.
It's just having a picture in mind and letting the market show you its hand. That's it. It's no more than that. Because if it doesn't do that, then you just bail. That's it.
Exactly. Take
no more, no less. That's all TA is. You don't need to be an expert. Just keep it simple.
Switch that to Hex, create a stake, move on. That's it.
That's even easier.
Yep. Because Ethereum went oversold. Now it could rally, but you don't want to confuse a relief rally.
We have maybe 3,300 if it keeps chugging along this line, keep going, right? But it would need to break above this line, right?
Exactly, because it might just go kiss that yellow as a stop and then bail. This is perfect.
That's it. Yeah, this is great.
That's it. Yeah, it's all recorded, Maddie. It's all recorded. 3 weeks from now, right? Well, we're just gonna come.
Hey man, we just doing what we do, baby.
This is cool.
It's light work, man. We just doing what we do.
We'll do what we do.
What was my one trade this past week? I panic sold a quarter of an ETH. I forget what it was at. Maybe it was all the way back up at 2,300, but I got the hex price of 3.5 cents.
Hey,
so I'm feeling pretty good about that. Yeah.
No, let's talk about that for a second. Seriously, quick math, right?
It's a good swap, baby.
You're swapping out, what do you say, 2,300, right? Ish?
Maybe, yeah.
Well, roughly.
I can't even remember. Who cares? Like,
no, but watch this. Because you bought it at 3.5 cents, right? And now the price is, let's say 5 cents. Probably going to be more by the end of the weekend. But let's say 5 cents. Just from that move alone, right? Because he went up 1.5 pennies, which means he went up 40%.
Yeah.
That's what people don't understand. That's what I was trying to tell my friend, like, don't be stupid. Like, understand the unit bias, because Hex moved at such a high velocity that Bitcoin will have to go to hundreds and millions of dollars to get the same kind of gains. They don't get it. Because technically, that means your Ethereum value converted to Hex before staking went up 40%. So technically, that move is the equivalent of me saying, no, you just basically converted Ethereum at $3,200. That's what it means. Exactly. People don't understand. And guess what? By the time Ethereum might go to $3,200 again, we might be at 6 cents or 7 cents, which means you doubled your money, which means that your Ethereum value is worth $4,400, $4,600, sorry, because you doubled. So here's
how I kind of thought about it. Like, So how much ETH do I really need, right? Because we know that I hate ETH, right?
Exactly.
But I've been held hostage, right?
Yes.
And my stakes. I've got this huge team of workers. They're printing out hex for me every day, right?
Right.
Best employees, as Karim would say, and but they're all held hostage by the ETH miners, and somehow this is being sold as like security theater or something. All these people who are protecting me from double spends. They're charging $100 to send my hex somewhere. That's too much. And so when I really dig deep into how much ETH can I really get rid of down to the bare minimum, and so I'm thinking, all right, well, someday ETH is going to probably switch to 2.0 after Pulse Chain solves everything, and ETH gets messed up from that, right? Which I'm going to be laughing and having a good time. But so when I look at my staking ladder, if I have 1 or 2 stakes coming out a year, really how much my total percentage of my portfolio is not going to be a cheap end stake, even on the ETH side. Well, now that I'm thinking that, oh, wow, okay, I've got 15 years worth of stakes, maybe 1 or 2 years is really going to get affected. Even if I had 0 ETH and I let them bleed out to benefit whoever except the miners, right? And then that's just going to bleed into the rest of my portfolio that's chilling out there, hanging out and not having to pay this ransom. So that's how I feel good about letting a little bit more ETH go for Hex right now, is because I'm really starting to realize, well, the way that the game is playing out is that I probably won't need as much ETH as I thought I would in order to get those Hex stakes out, because it's really just the next 2 years.
Amen. Well said. And this is the only reason why we'll hold a little bit of Ethereum, just for gas fee purposes. And this is why this chart, again, that Wells beautifully pulled out, is the only reason why we're watching this chart, just to show, without worried about USD, look at the Hex ETH ratio. Because if you constantly trend the way it is, your better move was to be in Hex, because your Ethereum value would have been greater. And this is why if you were to do a measure move, you get to see that really nice 40% that we've been talking about, and this continuous trend. So
you can buy into the narrative of network effect and first mover advantage, but what system do you know that it corrupted itself and then magically got better, right? It reformed itself and saw the light, decided to stop wrecking all the little guys. And, no, that happens by rebellion. It happens by installing new people who are bound by math instead of by politics and greed. It's that's the future of these systems. I hope in the world is to be ruled more by the fairness of math than the greed of man.
Yeah. Oh my God, Wells, man, I love what guys. This is another amazing chart Wells is pulling right now, which is amazing. Oh my God, can you go back on the weekly? We need to break this down for people to understand. This is also important because we
just like Ethereum chart.
Yep. And we know that some of the craziness of the Ethereum was in the alts and all this other stuff, which mimic obviously Ethereum, and Ethereum is followed by Bitcoin. You get to see those long-term trend line support that automatically mathematically generated by the software Wells use is already letting you know that it's breaking the trend. And every time that happens, you can't make this shit up. And the RSI is entering that zone, and then it's death. Like it breaks, and then see you later. Back in 2017. Yep.
Do you think that that's because of the pattern of whales rotating out of Bitcoin into Ethereum before they rotate out completely?
Oh, absolutely. Because the first thing they do is that they got to make sure, the cycle is they buy the Bitcoin. They've been holding the Bitcoin for a while. Then they move to the alts because they're going to pump. There's a little bit of rehypothecation because it's just the same fund rotating around, right? And then when it's go time to get it out, they know that they got to move to USD. But Ethereum sometimes is better because they can't just go all the Bitcoin to USD, right? Some of them try not to create, taxable event without to report it, even though it's a waste of time. It's going to be fined out regardless. But they may not have enough USDC or whatever available. So by rotating to Ethereum, which is pumping at a time because of all the narratives and stuff, it's a safer bet for them to go there because they also go to DeFi, right? Hex, other products, which obviously yield way less. But nonetheless, those products are being used, the Aave, the Compound, or whatever. That's why they get a little pump too. So they trying to get that safety, and then the altcoins and the shitcoin get murdered first. The little ones do well, and then they'll rotate back to Bitcoin after switching to USD. So it's the same narrative we see over and over. But this chart is great because Wells is showing you that the overall money is leaving the market and going to like Tether, USDC. So you don't get caught up with all the manipulations and you look at the big picture. Is the money coming in or is it coming out? And every time for all the cycles, when that trend is broken, that's the beginning of the bear. Because since the COVID dip, we literally pumped for 6 months straight. Look at it. Actually, a year. What am I saying? March, boom, we exploded. See, the moment it crossed, that was the when we exploded out of the 10K, right? And then look at that.
427 days.
Yep. And right now we're in that little for the total crypto market, right? We're in that complacency phase. People think, oh, it's gonna come back. Oh, don't worry, buy the dead, Not understanding that RSI is already bad. MACD already left the building, and again, this is the weekly chart. Very important. We don't worry about 4 hours, all the noise. Big picture. When this thing goes below, bear market. 2019, same thing. When it went below, bear market, and he never went, and then COVID dip. 2018, same thing. So the signs are out there for people to see if they understand. Take the emotion out, protect yourself, and buy and stake hex because you get the yield while this bear move is playing out. Because in the bull market, because Wells, can you please go back to the chart on the left side? Can we see every time he has dips before, he didn't break that thing, right? If you go back past 20, see people. Oh, I like that. No, right here. So I want to show people every time some of the crypto influencer who are still delusional are telling you, oh, but Bitcoin is used to do 40% dips and that's true, but not 60% dip. And based on Wells chart, even the 2017, 2018 bull market, when we were dipping 30, 40%, the candle never closed below the yellow thing that Wells has. You see that?
Yeah, that trend line.
The trend line holding support because the moment it broke, bear market. And right now, we closed the candle, weekly candle below, which is bad. Now we're doing the relief rally. All depends where this Sunday candle is going to close. That's going to be a big deal. But if we can't retake the yellow line and we close below, which literally happened in 2017, 2018, big red candle, tried to bounce back up, failed to hold, because throughout the week, whatever happens, nobody cares. MACD already went under. So that tells you that this might be the beginning of, if you look at the MACD in 2018, look at how low it went, how deep the hole was. This could be what we're beginning right now. And again, it's backed by crypto quant. It's backed by the negative premium, backed by sentiment, a little bit of complacency on the overall market, because this is not Bitcoin. Bitcoin already played out. This is the total market, which, again, Ethereum is the last one to go. Ethereum got its 3x too, from 1,500 to 4,500. So pay attention.
Don't get locked up.
Yeah. How long is that time period? Like what you have right now? How many is that a year?
That's 343 days.
It's insane. Hexagon, you see this? You see a little red square. You think, oh, that's small. That's a weekly chart.
Yeah.
Imagine how much interest can you earn during that time, waiting for your new all-time high to come back, especially, sadly, if you bought Bitcoin at, 60K or whatever.
And just let's not remember, you don't really get moves like that in Hex.
Oh, facts.
So, yeah. All right, let's get to the goodies.
All right.
All right.
Boom. No disclaimer. The information displayed in this broadcast is known to cause increased amounts of FOMO. WhalesOnly and his guests are not responsible for any losses you may accrue for having weak, puny baby cotton candy hands. Take accordingly.
My favorite part of the show.
All right, guys. The first 527 days. This chart is comparing Hex and T shares versus Ethereum and Bitcoin. Bitcoin is not yet gone live. We're still about 35 days from that point. And Ethereum is giving us a reading of 822.
Right after
With,
Vegas, Bitcoin
yeah,
goes live.
right after Vegas, probably. That's right. 40 days away. That is right. Well, no, a little less than that.
Oh, really quick.
Go
Somebody
ahead.
asked, can anybody explain T-shares? Very simply, it is your share of future compound interest that's paid out in Hex. The end.
Yep. When you buy Hex and you stake it, you end up getting something called a T share, and with that, you earn shares in the payout pool that gives you a portion of your Hex that's paid out by the amount of T shares that you have. The more T shares you have, the more Hex you make on a daily basis, and that's why T shares are important. Hope that helps.
Thank you.
Sure thing. So the Hex index is at 22,761 rounding up, while the T-shares index are at a whopping 40,458. Yeah, on that index. It's crazy, bro. Hex supposed to be payday at 952, rounding up. First halving at 997, just going sideways. It'd be funny if it just ends up rolling over.
No, we will. By the end of the week, baby.
Yeah, we're only 5% behind it for now. We're 669% ahead of the second Bitcoin halving, and 408% ahead of the third Bitcoin halving. So we're just rocking along, man. 189 days after post big payday, just doing what it's supposed to do. You know,
Cool.
Living the life.
Amen.
Can't be mad at it. T-shares and just kicking ass, man. We're at all-time highs every day versus Bitcoin now. And we are traversing very near all-time highs versus Ethereum. And Ethereum is at 2 times where it was here, right? What was this? November 1st payday, right?
Yep.
Let's see.
Because in payday turn, it factors in T-share value increase
just to get a relative cost, right? November 1st. Yeah. $370, man. Yep. $467 was the high that day.
Yep. Because this is before also the big payday.
Yeah. So that's major.
Yep.
Right? That's major.
T-share acceleration is happening now.
Correct.
Faster and faster.
Correct.
You need to understand.
Because
separated.
Ethereum costs 10 times that.
Yep. Well, understand, it's not just about the price of Ethereum. Price of X share rate is now moving more and more violent. As high, okay, very important reminder. Hex clip is your cue. As high as the Hex price goes, every time share rate goes up, it becomes more and more important because the value of that such share rate becomes more impactful. Example, in the beginning, when Hex was below pennies and lower than that, when the share rate goes up 20, 30, 50 points, which was also hard to do back then, it doesn't really matter because the Hex price was low. Therefore, a 50-point difference is like basic points. You don't even realize what it is. So it doesn't really do anything. But now that we're like 1 penny, 2 pennies, 3 pennies, 5 pennies, and now share rate can go up 50 points and faster, that becomes more impactful because it's 50 more Hex when Hex is valued at 5 cents. The same way when Hex now is valued at, let's say, 10 cents, and then we do 50 points move, that means it's a $5 increase. And remember, share rate never goes back. And then when Hex is $1, which is the analogy I always use to make people visualize, which will happen one day, very soon, stay tuned. When something goes up 50 points, that means that the share rate makes the T-share price goes up. Imagine going up $50 a day. Do you understand the insanity Those who are not staked are going to be left behind so fast it won't even be funny. So understand, and that's what Wells is able to show you here in the return stream, because he's telling you that we're getting the same rate of payout value similar to where Ethereum was, literally at a price almost 6 times less expensive.
Crazy,
So
right?
understand that. That's crazy. Understand how valuable. This is literally diamonds in the making, live. It's an everyday live uh, for the Bitcoin people out there. Halvening, you know what I mean? Rough day. It's not even a halving anymore. It's a
Wishing they
strengthening.
were getting paid. Wishing they were getting paid, baby.
Hey, shout out to you, Aaron.
Yeah,
Welcome to
shout
the
out to
family.
Aaron. Welcome aboard, brother.
If you bought
Oh,
through
yeah.
MetaMask, you want to go to go.hex.com, connect your wallet, and then you'll be able to do the staking over there and everything. If you bought through Staker app, which again, anybody needs a wallet, hit me up. I'll let you know. It's all directly through the app, which is great. So you can find me on my Twitter, and then on the bio, click the link. Or if you download the app already, let me know. Hex Dream account on Telegram. Find me from the main chat. Don't get scammed. The scammers out there. And then I'll hook you up with a wallet. But if you did it directly to MetaMask, go to go.hex.com, and that's where you can do the staking. So make sure you have a little bit of ETH, because you're going to need that for the gas fee.
Yeah. Yeah. So let me explain the T-share. So what happens is, Aaron, when you go to go.hex.com to stake your hex, the machine, the tabulator, is going to show you how much hex you have, or
Yep.
how many T-shares you have. Hold on, man. Let me just pull it up. Jesus.
Yeah, I was just about to ask you if you don't mind. Yeah.
Hold on. Let me just pull up the appropriate wallet here for OPSEC purposes, of course. Yeah, this is good
Meeting the
enough.
cover. Aaron, it's truly up to you, but we're going to give you a small demonstration about how the share rate works. Wells going to break it down and what's the value of there's something called a longer pays better bonus. Wells, take it away. Kind of break it down.
Yeah.
And
So let's
can you zoom in a
assume.
little bit?
Can I? Let me see.
If not, oh, nice. Awesome. Thank you.
There we go.
See, guys, share rate went up today. It was at
Yeah. Oh wow.
717.
Yeah, it was
Mm-hmm.
1737 last night or something like that. And
Yeah,
it just jumped a nice chunk.
50 points.
So there you go. So let's take Aaron's example of 20,000 hex, right? Let's just do the typical 5555 stake. This gives us a T-share count of 3.378 hex. So this is going to be the amount of hex you're going to be printing every day, right? Because you're going to get that T-share amount
Times whatever the payout is, which right now is roughly
times whatever
5.7.
the payout per T-share is.
Yes.
Right? So then that'll be 3.378 for today times 5.817. So today your hex payout would have been 19.64 whatever hex.
Yeah, times 5 cents.
Multiplied 5 cents. And that would have been $1 for one day.
One day.
And that
Okay.
multiply
And
that
these
by
are
365, and that's your yearly income.
Yep. And this is how we track the APY of 38%, because chances are the 20,000 hex that you purchased, right? It
Probably
costs you
$1,000 or something.
exactly. So, and because you stake for the longest period of time, in this example, Wells did the longest, the 15 years. What happened is you got a 200% bonus. So you got 3 times the amount of T-share. So it's almost as if your money is working 3 times more. So when you have 3.3 T-shares roughly at $1,000,
Longer pays better bonus.
Exactly. $1,000 is actually yielding as if you purchased $3,000 worth of asset value. And that's how you get your payout based on that. So
yeah, it shows you here when you put the 20,000, this is the 2 times because you got 60,000 effective hex off the bat.
Yep. And also, just to make an example, obviously, if you stake for shorter, which you can, you would have get less of a bonus. So it's roughly about 20% for every extra year. Yeah.
Let's do for a year, just to go on the extreme. You get 1.35 1 T-shares, right? Which would then change the math entirely here.
Yep.
right? You would get
You get less bonus if you stay
1.351.
for shorter.
Yeah, times 5.817. You guys get it.
Hmm.
So a whole lot less hex being printed, which that's just a sad number.
Yes.
Uh, yeah, it's like 35 cents,
Yeah.
39 cents.
And here's the caveat, Aaron, is this is also before price appreciation. It's very important
Correct.
because when you're locking the T shares, they're gonna be more valuable in the future. I'm a big proponent. Everybody knows me in the community, right? Hexstream account, long-term thinking. I said it many months ago, almost 9 months ago, and I'm gonna say it again. I firmly believe, and I'm ready to bet $50,000. Whoever's willing to take the bet, if they don't believe me, a T share will be more expensive than a Bitcoin. So if you stake for the long term and you hold that T share, look at it as if, oh yeah, maybe it's three T shares because I can hold for up to 15 years. Imagine as if you're holding three Bitcoin that you bought 10 years prior for $1,000, and Bitcoin could be worth literally 15 years from now, Bitcoin could be worth 250 grand. Example, but a T share will still be more valuable. So something that you bought at $1,000 and you got 3.3 of it could be worth in terms of asset yielding, could be worth literally 15 years from now, somewhere around being better than a Bitcoin. So almost borderline 800,000 to $1 million worth. And if you're still trending at that time, somewhere around, let's be conservative, maybe 20% APY at that time, that's
Mhm.
it yield you anywhere between 100 grand to 200 plus, and excluding penalties and stuff like that. That's how the value of long-term thinking can be, because many people in the community, and some of them are in the chat, they can tell you how small investment, less than $1,000, many of them turn into almost six figures. It has already happened. Again, this is Quant game. This is not feelings. This is facts. The chart has it. Wells has the chart. We have the return streams. It's about understanding what you're holding, and the true value comes in the long term. Just like if you work at a big company before, they talk about equity and how to build equity over the long term to get the value. It's based on that. So
Well, and one lucky member of the community set up a test account that started at $180, and that is worth over $100,000 now. At one point, it was 180,000, right? And so that was their test
Crazy.
account. Here's an excellent resource. I put a link here in the chat. You can go. This is the sub article he got published in the Data Driven Investor, which is like a magazine there on Medium. But this is the Hexagon journalist that we all know and love. He gets me pumped up whenever I'm doing impossible tasks like setting up the Hex conference, and is a really great guy. Too long, didn't read. tldrtaylor.medium.com. And he's got articles like this one,
Taylor's
many of them. This one says how to stake Hex in 3 easy steps. And then he has all these resources, a simple guide,
yep.
3 steps. He's got the
He's a true pro.
walkthrough and the screenshots
Yeah, he
on
is.
everything. Select the stake tab, create your stake. And then he has this awesome video here that I have on my YouTube page as well that explains.
And make sure to follow him on Twitter too, because he posts
Yeah.
great stuff there, articles. Very important. I love Taylor because, like what we're trying to do here at Quant Game, he takes complex things and he write it in very simple words so the average person can understand and don't feel like too much jargon. And we're trying to include more people. Like I always said, if you truly understand something, you need to be able to explain in simple words, not to look down on people. Educate, and Taylor does a great job at that. So Taylor, if you're watching, shout out to you, bro. Much appreciated the work that you do.
And he's got all these awesome articles that will really
Yeah. And some
help
of them
you to
were big. Yahoo
understand.
Finance, some of them were features in many big
Yeah.
publications too. So that's
How to
awesome.
buy Hex in 3 easy steps as well is one that he did back in December as well, with all these walkthrough videos. And so you can really see the history. He's documented the history of Hex, and
Yep.
you can see even more there on his Medium account. So
Yes. We have another one on Twitter that I like his handle. I think it's like documenting Hex or something like that.
Uh-huh. Yeah.
He's really good at catching good article and quotes too. I like him.
Yeah, he is.
We have great people in the community, man. I'm excited. I'm just but
Absolutely.
guys, again, anybody new, that's what Quant Gang is about. That's why we're going viral because we're not out there giving people, like feelings. We're giving facts. We're backing up stuff. Like Will said, we're not taking off tweets. We're not retracting what we said. People can fact check and come and see because we're here for the long run. We're not going anywhere.
Nope, surely not.
So do we do ladders or only do 15-year stakes?
Well, I personally only do 15-year stakes, so
Yes.
yeah.
I'm gonna say it again for the new people watching, because Maddie always said that, which is important. I have what I believe is an indestructible strategy, so you don't have to feel guilty. And I look at it like a percentage because I look at all the math. This is something I slept on many days to come up with, right? I call it the strategy where you can never win because you never want to underestimate the value of long term, right? So let's say you have 100% of your stack, right? After you bought as many hex as you can. That's number one, right? Number two is for the staking strategy. Hex clip. You take 30% of your stack and you stake that for 15 years. Now, why is that? Because to maximize the value of the system, staking for the 15 years allow you to do two very important things in the Hex system. Number one is called T-share preservation. You can hold a T-share for the longest time period allowed in the system, which is 5,555 days, which is 15.2 something years. So that's number one. And number two, what that does is you get the maximum bonus allow, which is up to 3x. It's 200% bonus plus the 1x you get, so it's 3x. So the 30% of your stack, when you stake that for 15 years, is act as if you have staked 90% because you yield that. Because in the entire system, which I do a lot of research, most hexagons, all ladders included, are usually staked at an average of 90 to 95%. So 90% stake, 10% liquid emergency, whatever you want to call it. So by taking the 30% and staking for 15 years, it's act as if you stake 90% of your stack and you get the T-share preservation for the maximum amount of time. That's going to build naturally also your strong hands. And like Maddie always said, psychologically, you're not going to be in fear because you stake for the long term. So market volatility matters less. And also psychologically, there's just this feeling of getting paid every day. It's just, you can't put into words. You have to experience it to see it, which is great. And then the remaining 70% of your stack, this is what I call freestyle. You can do, 10-year stake, 5-year stakes, your birthday, whatever it might be. But again, the smaller your amount, you got to be mindful of the fees, unfortunately, the gas fee. Now, when we move to Pulse Chain with penny transaction, Wild West. But for now, you got to be mindful of that and play that long-term game. The same way also, depending on the situation, if you have more money coming in, if you're still working, if you're young and you're planning on buying more hex and add to your position, and let's say you have $1,000, but you can put another $1,000 in the coming weeks, it's smarter to stake that entire $1,000 for 15 years because you got more money coming in. So looking that kind of variation depending on the situation. But the key is 30%, 15 years, T-share preservation, and the other 70%, you can do freestyle with it based on your situation.
I'll give my answer next. So I'm a day 4 guy, right? So I got into Hex on day 4, and there wasn't people out there who had all done the math already and who were able to explain the value of T-shares in the first place. And the game of Hex was different back then because the APY was maybe 10% or something, which isn't nearly as much as it is 40% plus believing in the project more now. If I could go back, what I would have done is I would have set up to have only 2% coming out per year because I plan on only living 2% of my life each year, right? And then I would put the whole rest of the stack at the end. So at the maximum 5,555, right? And then I'm going to roll that over every 15 years. I'm going to roll that over as medical science advances and as lifespans get longer and longer, and maybe people start having negative birthdays for the first time because aging is getting reversed, then I can reevaluate my strategy and decide if I'm going to live longer than I ever thought, which is most people live longer than they ever thought. Then I can tweak those numbers just a little bit. But if I'm not going to live more than 2% of my life in the next year, why do I need to have more than 2% of my absolute highest paying interest coming out when I'm having to sacrifice that greatest compound interest? At the end of the exponential curve, that's the best part. So why do I want to give up that? Because I was underestimating how high Hex could go. That 2%, right? If Hex goes up another 1000x like it already did, okay, well, that's a lot of percentages that maybe I don't need to 1000x my lifestyle, right? Maybe my lifestyle can do a 10x, right? And then the rest of that. So I mean, you can do the math for yourself and decide what makes sense. But I like to frame it that way because I wish that I had realized it back then, but also because it still leaves meat on the bone for people who are coming in now who are going to be able to get their fair share of the system, because I'm already locked in at whatever strategy I used. That's why I want to give you a better strategy.
Absolutely. And again, for people watching, we're just trying to be mindful of the new people coming in, because Maddie's absolutely right. That's a little bit more of an advanced strategy. But if you're new, at least you get the gist of it. And that's the beauty about the system. You can play with it, see what's going on. And the beauty about staking is that even when the stake ends, that doesn't mean you have to sell. Very important. Like even me in the very, very beginning, I did some short stakes just to see how the system works, that it works. I'm comfortable staking, how that works. And then boom, then I did my 15-year stake right away. Obviously, at the time, nobody was doing it, but I did a little bit just to test it out. So once you understand that and that value in the long term, you don't have to sell. You can always restake and for longer, which is better because you get more value. So do the math, sit down with yourself, look at your discretionary income, look at how long you're going to be able to bring new money in, and you can front run that by staking longer because the price and definitely the T-share is not going to wait for you. So that's why it's important to play that long-term game if you can. And another advanced strategy is the reason why 2% is really powerful is because if you think long-term, 2% and then the price do 100x, 2% becomes another 200% of what you had before. So as the price goes higher and higher, you can just stake more and more and more and go back to that 2% that you wanted as the price rises. So understand that, play long term. But in the beginning, if you're a little bit scared, that 30%, 70% is a strategy that never fails. I challenge anybody, whoever it is, hit me up. It's never failing. So if you want to be a little bit more adventurous, like some of us, because if I were to tell you how much I've staked for 15 years, some people will probably faint. So it's just, but again, once you learn about the system, then you can come to your own understanding later on. So, but that's great stuff.
And yeah, I like your comment too. I would echo the idea that you can start off making your longest stake first after you're comfortable, and then you can build your ladder backwards.
Yes,
and what that does, it allows you to set up a smaller ladder if you want first. So you could do Quattro Cinco, 15-year stake, then a 10-year stake, then a 5-year stake, then a 1-year stake, and then you can go back and fill in the rungs, or you could do 15 all the way back, 14, 13, 12, depending on what your income stream is and what your strategy and belief is in the system. The people who believe more in the system and prove it by locking their funds, sending money to their future selves, get rewarded the most.
Absolutely. And this, again, this is the mathematical fact. Quick math. Your first stake should always be your longest stake. Why? Because share rate will be, in hex term, will be the cheapest it will ever be. So whatever day you're getting, that's the cheapest it will ever be. So that's why mathematically, no feelings here, mathematically, the first stake should always be your longest stake. So you can preserve that T-share value as long as you can, and then fill up the rest from there. So it's back up that math.
There are some things that can't be calculated in the system, like the cost of finishing your stake. because the variable is the security racket that's happening and how much other people are wanting to use that.
Which
those
Paul's gonna
limited
fix?
computing powers. And since the system is dynamic, right? On day 4, it was pennies to start a stake or even end a stake at the maximum of 15 years wouldn't have been more than a few dollars. But the system is constantly being gamed and changing, and so the bottom line is that if we have all these people who have staked their money and locked it, then we have all these people who have an interest in making sure the system continues to work. Like that's what Pulse Chain is, the result of a proof of stake system in Hex on Ethereum, because there are all these stakeholders who invested their money and who now want to see the project succeed. And that's what's happening, even without Ethereum creating any solutions, and even with Ethereum creating a bunch of problems, the proof of stake system is literally coming true in a number of different ways and levels.
Absolutely. Yo, Wells, check out Axis comment. What up, Axis? Hey, you got your tip, man. It's not 6.5 cents, so you know
We're
what
trying,
I mean?
man. We're trying, but it's not working.
You know what I mean? We got to spread the gospel here, so
Well,
give me real. But hey, I didn't Ethereum, you know.
The problem is that people who listen to us lack their hacks, and so even if we did FUD hacks, they wouldn't be able to sell.
At all. They'd be
That's the
stuck
problem.
like Chuck. Sorry.
Yeah.
It's just too good. But yeah, Wells, please continue.
So the cost of 10,000 hex was $494.82 at around 8 o'clock, which is when I recorded the price. With the cost of a t-shirt at $880.33. Crazy numbers. Giving us a t-shirt rate of $17,790. APY for the day at the crossover of 38.21. And this pair per t-shirt Sunline is giving us a total of 2,058.6 hex, which is what you've gotten if you've been staked with at least one t-shirt since inception to date. The hex index is again at 22,760. And we're just showing here how hex just always through time traverses and touches this line. The scaling will move with the increase in this number because it's always going to increase along with this number too. It's just a beautiful thing. In percentage terms, it ends up being 186,636.63 on the index. I mean, this is 18,000x, man. This is just retarded.
Okay, that makes sense. Yeah.
For you people, that's what Wells just said is holding a t-shirt since inception would have paid you over 18,000%.
Yes.
18,000x, sorry.
18,000x.
On your money.
Yes.
That's how valuable those workers are. Their productivity just keeps going up. It's insane.
It's insane, bro.
It's insane.
Because you went from 0 hex to 2,000 hex.
Yep. Per t-shirt.
T-shirt. That equates to 186,536%.
Yep. And whoever you are, based on what day you enter in, you can just it's kind of like the bus. You're hopping
just
on the curve, and then from there up, that's whatever you gain so far. And
correct.
Just getting better and better.
Correct. Yeah, it's a beautiful thing. I've been in since around here.
Yep.
So
which is
I
why
got it right on time.
Yeah, which is why Maddie used to say when the arcing was low, we're getting that 10, 12, 15%. And then when the arcing start getting high, that's when we start getting the 30 to 40% APY. So the value proposition is getting better. The hex value is going up. So the yield value is getting up. I mean, it just gets better.
It's crazy, bro. It's crazy.
And that's before penalty because then you add the
that's right.
And you're still early.
And
yes,
so
extremely.
This is only year 2.
Side joke: we're still way cheaper than Dogecoin. For those worried about unit bias, I got to
side joke. That's
side joke. It's so cheap, Karim. I'm like, okay, well, my stuff is better and it's way cheaper. Now what?
Oh man, too funny.
There's advertisements for Dogecoin on every social media.
Switch.
Really?
Come get the real crypto, not the joke.
That's
we always
crazy.
told you last week. The joke is on you. when he crushed. We got a Twitter post out there. Shout out to whoever created that. So far.
That joke was real funny. So the payout per T-share is letting you know. The payout per T-share index is letting you know that the system's payout per T-share has increased 5 times.
Yep.
The daily payout index has increased 170 times.
Amen. Yeah, 172. Yep.
So.
Yep. Shout out to Will comment. Yeah, T-shirt don't take bathroom breaks. You right about that.
That's right. Just keeps doing what it do.
They always do.
And for today's crossover, we have total T-shares at 11 million trillion shares, payout per T-share at 5.817 hex, and the daily payout from the system at 64.105 million hex. It's crazy. It's a beautiful thing.
And for those wondering, those big spikes on the purple, those are the day when we get those insane emergency payouts. Right. This is why you want to be staked, because you never know when those going to show up. So if that day you are not staked, you miss that extra payout.
Yep.
Imagine you stake for 15 years. How many of those amazing days you will get?
Oh, man. It's going to be crazy, brother. It's going to be crazy because we're going to be there catching it. No effort.
Delay gratification, people.
That's right.
Your account might surprise you years from now. You'll be like, where does all this money come from?
Oh,
You'll need real therapy after that.
It came from your past self, making those decisions now.
In your strong hands.
That's
Smart hands.
Yep. All right. So now we're going to go through the expiring shares, and we're going to go through the 4th of May, 6th of May, the 9th of May, 11th, 23rd, 24th, and 25th, because we're getting some changes now. We're going to see some shifting here. So at the beginning of the month, it was pretty much static, right? About 45-46%. For the first month on the chart here, right? Nothing to gawk at, just regular stuff. And then boom, stakes came out. All right. So now we dropped from 45, 46, 47% to 40, just like that. And then now we start seeing on the 24th, stakes shifting out to June, the short-term stakes.
Mm-hmm.
So the ratcheting of the T-share rate continues.
It's gonna be epic.
Yeah. So that's what's going on there. I didn't update the freaking date. It's fine. Same as always. Zero correlation.
Yeah.
Right?
Oh, we felt it on the market last week. How
sure did.
Correlated we were, right?
Sure did. And this is what I'm talking about, right? Hex always has that positive skew in the return stream. Right, and this is why. That's what you want to own. It doesn't move with the market. It doesn't move like this. It moves like that, right? And what that means is that this scatter plot is showing how varied the returns are for Ethereum and for Bitcoin versus Hex, which is just in this nice, tight, positively skewed group that you see on the right side of the zero for the x-axis. And that's just the key. Right, that's what we've always been talking about. That's why we see what we see, and it's really just that simple, man. You know, it's very straightforward. And again, this is the dollar chart for Hex. The Hex price is 4.948 cents when I recorded it, giving us a payout per T-share for the day of 28.78 cents. I mean, this is crazy, right? Giving us an adjusted Hex value of 33.73 cents. Phenomenal. We're just gonna keep making new highs, man.
And the T-share is almost paying 30 cents now.
That's
soon
right.
It's gonna pay over $1. And now you just do simple math.
17% versus the all-time low of 551 for the S&P 500 price to earnings ratio. So get it while it's hot, because it's not gonna be around for long. You know what I mean? So,
hell yeah,
that's that.
Stupid. Repetition.
That's all I got. That's all I got.
Amen.
Now there was a super chat from earlier that we didn't get to because we were on a different topic, and then we covered Pulse Chain a little bit, but I forgot to bring it up. So Big Smoke Crypto, I thank you for the $5 super chat. asking, are you concerned that the Pulse Bridge will be sabotaged by the ETH gas fees? That's a good question. So I think that so it's complex in the sense that, first of all, if the ETH gas fees are clogging the bridge between the Pulse and ETH, then what's going to happen is that's going to make Ethereum look really bad. It's going to make people think twice about going back across the bridge, taking their free coins from the system, and having to pay more ETH to get back on the ETH system. Is going to keep people in our playground longer, where if they're there, they're probably going to play. That's what casinos do. They want to keep you in the casino so that you're more likely to play the longer you spend there. And in this case, it's going to be worse than the wild, wild west in the sense that everybody's going to be doing price discovery on every single coin in Ethereum. And there's going to be the believers versus the haters, and guess who's going to get paid the most?
And I will say this too, which is a very important point in take, again, Quant Gang style, is bear market that obviously, negative, oh my God, but it's actually bringing a positive thing for the gas fee. So even right now, I literally just checked. I'm checking again, because the GUI right now for low transaction is 38, average is 42, and high is 53. Now, as we all know, it used to be way, way higher than that, even on average. So it's trending down, which is a good thing. Again, like Richard says all the time, bear market to some degree fix some level of the fee, and maybe just enough so that people can be not as much affected by it, so that we can get this thing rolling. And then, of course, we're going to get pennies afterwards, because right now it's a transaction average like $23, which is good, compared to 50, which it was just a week ago. So imagine how more bearish action, because what that does is the price going down also of Ethereum, price of Ethereum going down, allow the cost of in GUI term to also be less. So not only we don't get those, 80 to 100 GUI, now it's like 42, but then Ethereum price is also lower, so the price going lower. So to some degree, it kind of fixed itself a little bit, just enough for us to get, this thing started. And even if for 30 days, it might not be sustainably cheap, because it's very rare to see Ethereum do that. But at least, if we can get that for at least 2 weeks with a cheaper Ethereum price, it is going to help. So have some hope about that. But be ready, because especially for the value in USD, I firmly believe, the first week to the 10 days are going to be critical. So it's going to be designed beautifully so that even if you're FOMO, you're protected. So cheer up for that.
Also, as adoption grows on Pulse Chain, because lots of projects will see, our DeFi actually works over there, where the fees aren't high. What that's going to do is it's going to relieve pressure on the Ethereum side. And so all the haters are going to be able to have lower fees to get back to the east side, just as the Pulse price of all the copies is going up. And then they're going to want to FOMO back in once the price reaches higher than parity, on the copy, or even starts to approximate it. Once they see the scales tip, they're already going to be on the wrong side.
Exactly. And not just the copies. I think Paul's going to be able to enable new use case too that need, high throughput, low fees and stuff. So it's going to be very exciting and good for the overall system. But again, that's one of the positive side effect of a bear market. So that's what I wanted to highlight. So
Whales?
Oh, I'm good, man. I think we covered everything pretty spot on, man.
Right on.
Yeah.
Man, Quant Gang style, you know what I mean?
Yeah, man.
Recap
Straight to the point.
Stay the course, be great. Don't listen to the FUD. Stick to the facts. Keep an eye on those BTC premiums, you know what I mean? Keep an eye on those trend lines that we discussed. Yeah. Remember this stream, very important, because if you follow those basic principles, you don't even need to wait for us next week, because we're obviously very busy, but we like to stream once a week so we can kind of condense the information and provide true content. Obviously, Maddie has all the streams and Wells too, but it's good to look at it at the macro view. That's why we like weekly charts, so you get to not lose sight of the big picture. So you don't get triggered and narratives and this and that, whatever
All
the
that
Federal Reserve
craziness.
does. Exactly. Because if you're too short term, you're gonna get polarized, and that's how you're gonna get wrecked. Now you start to think like a trader. Don't think like that. Think like an investor. Hexicans are investors long term. We only talk chart to look at the good entries so you can buy the dip and stay for longer. So that way you get paid no matter what. So
That's
I'm
it.
always excited to be here. Yeah. Maddie, maybe we can ask in the chat if they have any questions.
Yeah. So, bringing up the topic of Vegas, Motley, the investor, accidentally mentioned on his awesome stream last week that you can show up and not have a ticket and be included. And that is not necessarily true. The reason why the tickets are there is so that we can plan ahead. For example, we had to change the location of the first day because we have already 180 people going, and the Stratosphere can't handle that many people. Too many people. So we're gonna go to the Mob Museum, their secret basement speakeasy, giant, awesome location. You go through you have to have a code word to get into the secret door, and so I spent a bunch of time doing all kinds of Hex Vegas related organization and stuff. And so the blog has finally been updated. Tickets are back on sale. Even though you might get a slightly different style t-shirt, we're ready to go with getting more orders in because I'm expecting more people than have even already signed up, which was higher than expected. And so go ahead.
Don't miss out, Hexican. This is your last chance. If you haven't get a chance, leverage
go
that.
To Eventbrite, or it'd be Hex Meetup.eventbrite.com. And you can also go to hexican.vegas, which is the blog that explains the updated schedule. We're changing the night that we're going to the club, again, because we're getting in for free and it's going to be awesome. You can buy VIP tables ahead of time. I've got the link for that. The links for getting a discount to stay at the Bellagio or at the Aria, those are posted now on the blog, so you don't have to personal message me to get those anymore. Hexmeetup.eventbrite.com, t.me/hexmeetup. So you can ask questions if you have them. T-Money and I are streaming. Oh, wait. I just gave the... Okay. I need to stop talking and typing at the same time. We're going to do a special Quant Gang stream in Vegas. And so we'll be there to kick it with people and celebrate the 50-cent hex that we'll see here in a month or whatever it is.
Yeah.
It's going to be sick.
Shout out to Identity Block in the comment. You're welcome, brother. And then, Wells, Sean Parker asked you questions. I think you can answer that about Vegas.
Yeah.
I already know the answer, but
yeah, I'll be there.
Yeah, you'll be there. And I think Silver had a question, but I'll wait for Maddie to be done first. That's a good question.
Cool. Yeah, and all the links are in the description below if you're on YouTube anyway. So.
Oh yeah, everything is in the description. That's right.
Perfect. Yeah, Maddie, can you pull up Silver's question? I think
Yes.
That's a great one that we can. So, and again, it's a great question again. But what I always say, because I like to stay congruent, which is important. Silver, my point is very simple. I always say.
Let's read it for the people who are just listening and not watching. So Silver the Antidote is asking, what do you view as the real value play? Hex to outperform Pulse on all time frames or some crazy market flip of ETH value into Pulse? Yes, we need Pulse for the onboarding and transaction fee, but thoughts on this?
Absolutely. So obviously it's a multi-question layer. So first answer is yes, Hex is the real value play, because again, that's what it was designed to do, right? Blockchain CD by definition, nothing outperformed that. Highest yield, highest performance, period, full stop, end of story. Now, all time frame could be tricky because anything can, pump a lot in the short term and then maybe not in the long term. So the long term, absolutely, Hex wins. That's why I firmly believe, and Rich has talked about this already, Hex will not be cheap on either change, period. Now, quick math. What I think is going to happen, because again, it's backed by math, is the lower fee, which is very important. I'm going to say this slow. Pay attention. The lower fee on pulse chains is going to allow T-share acceleration to happen even faster. There's a lot of people that couldn't end their stake because obviously the fee was too high. And them ending the stake also increased share rate. So on pulse chains, the T-share is going to accelerate even faster, which is going to make Hex even more scarce because a T-share becomes more expensive, which means you need more Hex. So T-share acceleration is going to act like a vacuum, sucking more Hex out of liquidity if you want to create a T-share. And then the ripple effect of that is because it's going to become more expensive over there and more people are going to be able to stake also. So now on the regular Ethereum version, it's going to play as a delay mechanism, but it's going to catch up there too. Because when T-share accelerate more on one end and more people are able to stake because the fee is so low, the value of the yield might start to go down there faster because the price will go up higher, which then is going to push the value proposition on the Ethereum version to also go up because it's a higher yield. So it's going to become like a bond market. We're going to have one with a high yield at first, and then the other one with a slightly lower yield, but the slightly higher yield is going to catch up to the lower yield. It's just like a yin and a yang. But first, is going to set that up. Now, Pulse as a token in the short term obviously is going to explode because again, so much value in terms of Hexagon is going to be there, be able to transact, more use case coming in. So you get all that value proposition play that's going to come in as well. So in a short period of time that you can get that explosion too. So as long as you understand the long-term value and the value of what Pulse is going to bring to the market and be able to be deflationary and be able to do what ETH 2.0 is trying to do, which we don't even know if they might be able to do it. So you get this kind of both things. But remember, Hexicans are not traders. You're lucky. You don't have to choose. If you just follow what we've been talking about, if you follow what Rich has been talking about, that simple, 1/3, 2/3 play, you don't even have to scratch your head and worry about what's going to happen. Place your bet, buy your Hex because you need that no matter what. That solves the problem. And then place your bet. Think of the value you want to invest in dollar term. I always talked about that because by the time we sacrifice, who knows what the price is going to be. It could be much higher than anybody anticipated. So place your investment in dollar term, make your investment based on that. Set, chill, relax, get paid every day. Simple as that.
I'll add to that. So the way I view Hex is as a fixed income product, right? That provides a very high yield. It serves a very specific purpose that's very high utility to everybody. So with that, it automatically attaches itself to automatic high value, right? In terms of dollars or fiat, whatever you want to call it. Mm-hmm. So that's Hex, right? Pulse is going to be the new infrastructure for crypto. So that's the way you need to view it, right? It's going to be an infrastructure play. And just think of it as such, right? It's going to be zero inflation, meaning you're not going to have any real recourse except for a hard sale on a dip, right? So the system isn't going to give it to you depending on how all of the coins are released, right? So just keep that in mind, that this is going to be another mathematical way of attacking a situation. I personally think that Pulse is going to be something that you need to get on day one at a minimum. If not, you're going to have a hard time getting cheap Pulse. So, it just depends. Do you want to own some of the best infrastructure in crypto and some of the best crypto? Oh, that's on you, right? That's the way I view it. I plan to own both. So it's my 2 cents on that.
Yeah. And Silva, you're welcome. Thanks for the kind word. Now, one more other person had a question asking about the T-share. So his name is, I think it's like JJP Jesse 90. midnight. So Jesse, the way it works is T-share started at 10,000 hex. That was the main thing. And then it's now almost 18,000, 17,760. So, one hex wasn't one T-shirt. One T-shirt started at 10,000 hex and it constantly goes up from there. So now we're about, almost 18,000, and it's going to go up faster and faster because you mimic compounding. This is how we get to preserve in the system that longer always pays better. In other words, if two people stake for the same amount of time, but one person stake multiple times to get to that, that person will always get a lesser yield. Example, if I stake for 15 years and you stake for 5 years 3 times with the same amount of money, even with the interest, I will always make more money than you because it's to preserve that in the system that longer always pays better, which is the right mechanics that make Hex so great. So hopefully that answers your question, which is great. I think somebody else. Next question.
And another way that people get left behind, remember, is that that it's a force multiplier on itself. So just
Yes.
because a T-share is only 80% higher, remember that it becomes, after 10 or 15 years, it becomes a function of everybody else's T-share has burnt out and they had to rebuy at a price that's exponentially higher, and
Yep.
yours is getting a larger and larger share of the compound interest because there's a missing number of, you don't know how many T-shares are going to exist 15 years down the line. Other than that, it will be far less than exist now at the same price. The price leaves you behind, basically. And so, for
Absolutely.
example, even with the amount of hex that gets spit out by each T-share, there gets to be a point where you can't buy back the same number of T-shares, even if you reinvest all of your interest and principal, because the system is so deflationary. So when we take that into account, it really drives the point home that I think Karim is so good at emphasizing, that that it's leaving you behind, but you don't know by how much yet, and you don't feel it yet. But that the nature of that exponential curve that is so impossible for humans to wrap their brains around. That's why Karim uses language like, you want to basically imagine and anticipate what the mad gains are going to be.
Yes.
And why he expresses so much urgency.
Yes.
In the sense of,
because we're basically forecasting what we know. Keyword, it's not speculation. What we know will happen because it's backed by mathematical facts. That's what the system is designed to do. Again, it's not like the famous thing is in crypto, right? It's not a bug, it's a feature. That's what makes longer pace better. And like to Maddie's point, if share rate is up 80%, actually in opportunity cost, it's up 240%. Because at that time, you could have staked for 15 years, get that 3x multiply instead of 1x because you got all the bonuses at that lower share rate. So from, let's say you got in today and share rate goes up another 10% in hex term, in opportunity cost, it goes up 30% because whoever got in and staked for 15 years before the 10% increase will get a 30% value higher than somebody that comes after the 10% increase. So that's why it's very, very important. And that's going to start to sound and be more and more apparent as higher the price goes, because it's going to manifest itself in the T-share price. That's why you want to stay vigilant, understand what's designed to do, think about it long term. And not only you're getting a bigger share of the pie as the other people exit the pool, and let's say the share gets burn after they get the interest and they don't restake or whatever, you're getting a bigger part of the pool, but you're getting a bigger part of a pool that's increasingly becoming more valuable over time. Because that's what longer pays better hidden value is too. You're not just getting a bigger pie. The pie itself is becoming more valuable. So ask yourself how much of the future valuation of the massive pool value, possibly, yes, I said trillions of dollars worth, 10, 15 years from now, how much percentage of that pool would you like to have? That's how you play chess and not checkers. You're not worried about narrative, bullshit, this, that, Feds, this, that. You already know where crypto is going. We show you where the DXY is. They can't raise the rate too much. Those are just temporary indicator to know where the micro tops are. So we're trying to help people get more money for their buck so they can buy more hex, stake longer, get a better yield. That's it. That's the only reason why we make sure, because if we can protect the community is going to be able to preserve capital so they can buy more hex, stake longer, and everybody wins. And the network effect can work. So, but that's a great question.
And so Hex 19 is asking about updating Vegas choices. Don't worry about that. The events, I don't think we've added to them. We moved nightclub from Saturday to Friday, and then we switched the strat out for the Mob Museum, but really we just need people to not just show up, because then I can have enough badges for everybody, and I think the nightclub only holds like 300 or 400 people, so we have to make some limits here on how many people are going to get to skip the line, before it's too
just
late.
set out the whole place, Matty. Don't just
exactly. No problem.
Yeah. In Pro had a question. The honest answer right now is you just gotta wait, because more details gonna come out for Pulse, because he was asking about the sacrifice. And when the official details and inks are ironed out, there's gonna be some type of blog post. Chances are we're gonna go live and break it down for people as well. So just stay tuned. It's almost ready, but you'll find out more when it's ready, so we can propagate the information once and clearly. So, but that's a great question.
And I've made the commitment that I'll do everything in my power to go live after Richard does, whenever the sacrifice phase starts, so that we can continue to make sure that you don't send money to the wrong place. And we need to emphasize on every stream that not only do you not share your private keys with anybody, no matter how convincing they are of an impersonator, but you also don't just panic and send money to a Pulse address, sacrifice address that hasn't been verified across multiple channels, and ideally would be verified live with several members of the community showing agreement.
Amen. I'm excited. Be excited. June is going to be epic regardless. We're going to do very well. We're going to have a great event. If you can make it to Vegas, that'll be awesome. If you can, that's fine. We'll celebrate for you in spirit. We're going to be taking a lot of videos. We're going to have a Hex Quant gang stream over there too. So it's going to be epic. So be ready for that. And again, as we always say, thanks for everybody for being here. So, you're awesome. Great comment. Let's see if there's more questions. Always more valuable for onboarding. Pulse.
And I put it in the comments before, but go ahead. If people have questions about a Pulse chain com that haven't been decided yet, then the best place to see updates on that is to go to t.me/pulsechaincom and then read the pinned messages.
Yeah.
So it's not t.me/pulsechain, which is some dead group that isn't related to us. So it's Pulse Chain Com on Telegram. Read the pinned messages. That's what Richard has highlighted that he wants people to know so far.
Yeah. And Russ had a great question. What/who is more valuable for onboarding, Pulse or the Dream? I think it means Dream account. Toss up. Russ, I personally believe, honestly, for the long-term value, like I've been saying, as stay congruent, I still believe for new people to make it less confusing so they don't feel too much like, oh, I got to feel like a trader again. I strongly, strongly recommend the Dream account first, the Hex, the Dream, protect and build your wealth. That's the most important thing. And then whatever else you have a little bit liquid or whatever, just decide in USD, hey, how much I want to invest into Pulse. So you got that play going on. And also because you're going to need Pulse to transact on the network, because it's going to be your new kind of like Ethereum for the fees and stuff. So, but Hex is something so powerful that somebody doesn't have to be like expert this, that, learn about the use case, what coins to invest in after on the pulse chain, blah, blah, blah. No, you can, worst case scenario, if you're busy, you want to go about your day, you want to build wealth, stick it to Hex, make it simple, buy your pulse because it's good to be into something that's early. But I will strongly recommend always onboard based on Hex. And since you're going to be able to transact better on Pulse Chain, then of course you need some Pulse for that. But remember, the key is about building wealth because the average person should not be acting like a trader. Remember who we are, what we stand for, and what we're here to build. So that's key. And then over time, when the yield comes out, they can do whatever they want with it. They can buy more Pulse, they can turn it into cash, they can pay a bill, buy the dream, whatever it might be. But let's keep the main thing the main thing. That's what pays you. That's the key. And then the rest, you can onboard more after the fact. So, but we're gonna have more streams about it over time.
I've got a simple answer to this question, and then you guys can take over with your answers. So Silver asks, what's your thoughts or experiences of infrastructure plays in bear markets? Well, so my noob answer is that one way to look at it is that a bear market is defined by how much the main assets have gone down. In this case, in the Pulse arena, it might not be a bear market the same way that it is elsewhere because Pulse PRC 20 coins are probably going to tank very quickly and then start to do an early bear market themselves in their own little bubble. What are your guys' thoughts?
Yeah. Wells, you want to go first? Well, I'll go first. I look at it this way. Infrastructure play by definition.
I was on mute, my bad, but go ahead. No, go ahead.
Okay, cool. So it's a little long-winded, guys. Bear with me. I just want people to understand the psychology. You don't want to think like a trader. Infrastructure by definition means long-term play. It's called infrastructure for a reason. Imagine you're a CEO or CTO, you're building a new company, you have your vision, all that stuff. You got to understand that you're like the chief, the captain of the boat. You eat the food last. You have to understand it's a long-term play. Bare minimum, and I'm being nice, it's 1 to 3 years, possibly 5 years. So because we're talking infrastructure, you have to explain like market is going to die at first. People are going to be talking nonsense, blah, blah, blah. But remember, that's your reaccumulation phase, right? It's like your wake-off accumulation pattern. Everything's going to be on the cheap. People just want to cash out today. Free coin, free money, da, 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 da. Let them dump, let them do whatever they got to do. Cash out the free stuff. Because when the market turns back bull, this is when those plays, those infrastructure play are going to play the big role. The same thing happened with Uniswap. It's the easiest example because everybody knows AMM has been one of the best infrastructure play that helped make DeFi what it is today. You know what I mean? Even some of those other yield stuff in the beginning, people didn't care until they care. But Uniswap is a perfect example. People got free money. They dumped it first. I mean, for us, rightfully so, because Hex was more valuable. Duh. But then when the bull run came in and the people came in and the usage went up, this is when those things took off. So you need to understand that infrastructure by definition means long-term play. That's when you get to capture the real value, just like what Hex has done and will continue to do long-term, because I've already told you, Hexicant, this is going to be the new bond market of the future. It's the biggest market on the planet, the most liquid, the most everything, and it pays trustless interest, no middleman. So once you understand that and you place your bet for the long term, the same way some of the people that I've talked to and some of the big whales, even in Pulse, they're planning the long term. And they already have strong hands because they're in Hex. So once you understand that, that's going to be the key, because what's going to determine whether you make a lot of money or whatever on that play isn't going to be about whether you find a good play. It's going to be based on how long can you hold. Let me say it again. It's not going to be about whatever good play you found. It's going to be about how long can you hold, because the true value of the infrastructure play will show itself in the long term. So everybody knows first is the blockchain itself. Then is the thing that allow the blockchain to function, automatic market makers, oracles, which is obviously what the AMMs came to do. Obviously, things like Hex, which is a no-brainer, fixed markets, and then whatever new use case that can come in that it needs to be used for high throughput, low fees. Whatever comes around, catch tractions, boom. But understand it's a long-term play. If you want to play infrastructure and think you're going to get money back in 2 3 months, you're wasting your time. It might pump, but remember, you can make a 3x or you can wait a year or two and maybe you make a 10x or 20x. Your choice. So, yeah.
Yeah, I mean, I agree to a certain extent. Sorry. um, the only difference here is that this is crypto, right? So while it is going to be an infrastructure play, you can expect it to probably be a little higher pace than what we would normally consider like for the legacy side, right? But it's
Mhm.
still nonetheless, um, this is going to be zero inflation. So I, I'd be hard pressed to see this actually move something like Ethereum. I think it would probably surprise people, maybe like a stop and go type situation, right? Like reverse a little bit, stop, go sideways, and then go back up. Maybe, right? Because it's zero deflation, zero inflation means that's just what's there. So if
Mhm.
people are really wanting to acquire the coin to do whatever with it, then they're gonna acquire it, right? So if it's anything, if the price action is anything like Hex, then you can expect that, and that's what I have in mind. But it's hard to say, hard to say.
Amen. Amen. Thanks again. That's why we talk about broadening our environment and long-term view because it makes it a little bit easier to predict. And if you understand what Wells just said about the no inflation, heck, it's even deflationary anyway because that's what proof of stake allows because it just lock more liquidity to allow the price to appreciate.
Yeah,
So,
and you're gonna be able to delegate posts to validator nodes too,
yep,
so that's gonna lock away supply as well. So there's gonna be a lot of factors at play,
yep.
right?
When
So
we
it's
have the
gonna
right
be
mindset in our
yeah,
community.
it's gonna be hard to say, but again, you guys have to understand. I would expect something created by the same person to be just as good as the one thing, right? So
Exactly.
Well,
And
and I love this comment, and I didn't get a chance to highlight it before, but I totally agree with you, Juicy. RH, uh, the founder of Hex, mentioning Hex to $1 all the time. He hasn't made a bad call yet. That's my experience.
facts.
That's
And
my
it's
experience.
gonna get there because again, to me, it's just a mathematical. I almost want to say mathematical facts because A, it's trending in that direction. B, liquidity keeps getting smaller and smaller because again, the value proposition is you want to buy more hex to get the yield, and the share rate is gonna do its thing to lock more hex naturally because to create that same T share, you're gonna need more hex. So as that continues, and OA playing its function because that's amazing to have every time people emergency and say 50% just disappear and never look back. That's going to act as a bucket that's going to help protect the price support. So when all those things plays out, I'll even dare to say if we didn't have the problem we had with the trading fee garbage, we probably would be much higher right now because the mechanics would have been even faster. Now we imagine running at half the speed with one hand tied behind your back. That's what the gas fee, and still we make crazy improvements. So imagine what is going to be on Pulse Chain, which is going to help trigger that even more. So once you understand that, you understand the long term play, and let's not forget, most of the people in the beginning for Pulse are going to be obviously Hexicans, and they're already trained. They have diamond hands. They understand the long term value of things. They understand this could be the ETH killer. So, and some of them have friends who were in Ethereum early days, and they saw what Ethereum could have done. So knowing who it is, what it's set to do, biggest airdrop in history, why the hell would they sell this when again the rich people, quote unquote, they don't need to sell? Because why? Why would they create taxable event? They already have the money. They just accumulate. So once you understand all that and you add to the value and you have a long-term horizon, that's the key word, long-term horizon, it's gonna do magical things. So and serve the new use cases that cannot be served right now due to the high fees. So thanks for the comment. Appreciate that,
Yeah.
Madison.
Th- thanks to Hex19 for the $4.99 super chat. Appreciate it. And what we're looking at right now is the WhalesOnly caught that the pulsechain.com website has been updated.
Nice.
Much more beautiful than it was before. It was updated once in the past week as well, going from just a one tagline all the way to having like an awkward list of things. And now here we have a beautiful list. We have a pulses happening in the background of the page. You can barely see it, but it's got a pulse there. So this is, I really like this. This is well put. It's well organized. It answers a lot of questions. I'm going to start sending people here instead of, probably both places. But the Telegram pinned messages, this is basically a better version of that. And this is where you'll be able to find updates going forward, I bet.
Yeah, so everything is getting nicer and cleaner and more professional, which I love. Even the hex.com website got updated. And again, guys, we're still, just for bragging right, we're still kind of gate kept. So things are going to get even better and better. We haven't even hit critical mass yet. So imagine what's to come. So brighten your horizon, think long term. If you delay gratification in the history of the world, you will always be handsomely rewarded in the long term. So once you understand that, and you understand you're in the right community with the right people, looking out for one another, we all want the same thing. And we'll get to that financial freedom. So, and we appreciate everybody taking the time, It's almost, 12:30 where I'm at. So, Maddie, how many people we got here still?
194.
There you go. Our roughly 200 people solid every time. So it's awesome.
Go ahead and hit the like and subscribe buttons now. Go ahead and follow. Go to youtube.com/WhalesOnly. Subscribe there as well.
Yeah, you can find me also like on Twitter. Very simple. You can type in, shout out to Maddie again. If you type stakerclass.com, it brought you directly to my Twitter at Your Magic. If you need a wallet, if you need to onboard anybody, very, very important. Staker app, let me know. Get them turned on. Let's keep adopting people. This is the great time because like Wells talk about all the time, fixed income is one of the biggest market in the world, underrated, especially in the bear market when people are looking for yield. This is the best time. You know what I mean? Even your Bitcoin friend that may be, down 30%. Hey, convert that to ETH, convert that to Hex, start earning some yield. If we're lucky, maybe this bear market ends in 2-3 months. If you're not, might be a year or two. Imagine getting paid every day while you wait. What's wrong with that? So, and getting a copy of that stake on the new chain, that's most likely, probability says from the balance of probability is going to do well. Think about that. It's a great setup. Don't miss out.
A bunch of these legacy guys this week, I'm trying to remember, I can't remember one of the guys' names, but a lot of them are starting to make comments like, it would be great to have a crypto play and be able to earn yield because of all the problems with money printing happening. And so we're at probably a great precipice here to where this is exactly what whales are looking for. And they're scared off so far because Richard and the community maybe wanted to onboard people who are not whales yet first, because that just makes more sense. That's a more decentralized, fair system probably, is to onboard true believers and then make the truth easier and easier for people to digest. And so, don't wait until you're getting stuff in the mail, because the stuff I'm getting in the mail says super high APY, 0.5%. And I think we can do a little bit better here right now. So.
Amen. Man, we'll be getting some great love comments the last 5-10 minutes. So thanks for everybody being here. Appreciate you guys. So it's going to be exciting. This is the time we get to shine. Top 5 is right around the corner. But yeah, don't squander the opportunity. If you're new, I highly, highly suggest up now while you can, because this price is not going to stay where it is for too long. So great things are coming up. Understand what you have. And If you got burned on Bitcoin, I feel your pain. We try our best to help people understand the difference, but don't lose hope. It's gonna be okay. Like Richard talked about on the stream, it's gonna be okay. It's fine. Learn from it. Switch to the better thing. Get your yield. Take advantage. Take control of your future, and don't let stupid, influencer markets, this and that, sway you or be in charge of, your money, which is not good. So take full control, and welcome to the fam, and get ready for an awesome year and more to come, because we're gonna be great, and we're gonna keep teaching that good stuff. So
Thanks everybody for tuning in to the 17th week of Quant Gang.
Yep.
We'll see you guys next time. Thanks for joining.
Amen.
Peace.